This is the structure how I propose to cover this session. We will first discuss as to how GST return is different from our returns that we have seen till now, whether excise, service tax, our own VAT and all. Just to kind of understand what is the logic behind having a slightly different return than what we have been having till now. Then we will just go through the return that normally a taxpayer would be paying. Any taxpayer other than some special taxpayers, any average taxpayer, what kind of returns they will be filing. What is the process of filing? In GST, the process, it also has slightly become important in addition to the format itself. So we will also see what is the process of filing of return and why that process has been selected, what is the rationale behind it. Then we'll go through some specific returns to be filed by some specific taxpayers. These are all simplified returns because these taxpayers are slightly simpler taxpayers. Their transactions are simpler in nature, so they have been provided a slightly simple kind of formats. So these 3-4 bullets are our first session. Okay, first session ends here, and the second is about ITC matching and reversal. We will first see why ITC matching and reversal is required. We have been seeing that this is one of the points which business has been raising of late on model build. Many people are saying whether this is required, and this is not a very good thing to do, and a lot of things. And we'll discuss why this is required. I mean, why it is not something which we chose to have. It's not a luxury that we are having, this ITC matching and reversal. ITC matching and reversal is a kind of, a necessity. We will see how I'll try to convince you how ITC matching and reversal is kind of a prerequisite for having GST. I mean, we can't have GST without having ITC matching and reversal, especially the kind of GST that we are thinking of in the kind of setting that we have. Then we will see how revision of returns or corrections of return or amendment of returns happen. This is another point which many people in the industry have been raising as to this GST does not allow revised returns to be filed. And by the time we reach this year, you will appreciate why revised returns actually can't be filed in GST. It can only be done through a mechanism for correction. Then we have some special returns like annual returns, first return, final return. And then one slide, as to how we can make it happen. Now that we would have covered all this, and we know what returns are, what the challenges are, how we can help the entire ecosystem deliver what we are planning to do. Why returns is a very simple slide. We all know about all these things, that returns are very important. I don't need to tell any of you because you're all tax officers. So what are the features of tax returns in GST? Okay. Now, the GST return that has been put in place, or which has been envisaged in GST, is a transaction-based return. Now, our returns that we have today in VAT or excise or service tax and all, or even say income tax, they are not transaction-based returns. They are like aggregates. So when you say file a return in VAT, you will say turnover. So you will say taxable turnover or sales made at the rate of at tax rate. So total sales in this particular tax slab, total sales in this particular tax slab, total input tax credit at this particular tax slab, total input tax credit at this particular tax slab. Or for example, in income tax, we will say gross taxable income. So that is how the returns start. We are not bothered as to how the total sales turnover reach that particular level. I mean, if you suppose he declares 1,000 rupees sales turnover at the rate of 4% tax rate, we are not really bothered in our return as to how 1,000 rupees or 100 rupees turnover was reached. But that is not how it is there in GST, and we will see why it is that way. In GST, it is complete transaction based. So at any taxpayer, he just declares his transaction. He says that he has issued an invoice of 100 rupees on which the tax amount is this much. That is what he declares in his return. And a return is the GST return is a collation of all such transactions. And we will see how it has been built that way. And after 4 or 5 slides, we'll also realize what is the reason behind having a return of that kind. I haven't seen any tax return in our country of that kind. Now, the entire structure which has been designed for a system-based analysis, for a system-based administration of that return. The formats that have been put in place, what details are being sought for, what details have been ignored, the entire design has been made keeping in mind that it will be filed electronically and it will be processed electronically. Manual intervention may come, but it will come at a very later stage, and the entire, not only the format, but even the administrative process of filing return is very tailor-made for system-based analysis. And one of the very big analysis steps that we will be, analytical step that we will be dealing with is the matching of input tax credit. There are other things matching, like matching of import details and export details, but the entire structure is in such a fashion that it is made for system-based analytics. There is one feature which we will be hearing very often is what we are calling auto-population. Now, because this is a pan-India system, see, till now we have been computerizing, we have been running a computerized VAT systems, or even say computerized. Even if you see the central government systems, in customs itself, there are two separate systems running. You won't see 100% integration even between the two systems that are there. So the integration between one tax system to the other tax system, one tax system of one state to the other state, we haven't come across. But because GST will be a pan-India automated system, on which everybody will be filing their return, there is an effort made to see to it that if a transaction has been entered by one person, it shouldn't be entered by anybody else. So for example, if seller has uploaded his invoice, which is his output liability, which we know is an input tax credit of somebody else, we should ensure that the buyer doesn't have to upload it again. Otherwise, it is duplication of work. And also, it leads to a lot of errors. So suppose I upload my sale invoice, which is your purchase invoice, and I upload the invoice details. Even if I have to upload, some 4 or 5 fields only from that invoice, some invoice number, date, and things like that. Even date, I may make a mistake. Even if I don't make a mistake, instead of putting a slash, I put a dash. So yeah, instead of putting 2-digit date, year, I put 4-digit year. So these kind of errors possibilities. So this auto population is something which is a very key feature of the GST returns. Then auto reversal, which we'll be covering in great detail of input tax credit, is something which we haven't heard of till now in our day-to-day tax administration, where we are saying that I will give you input tax credit if you claim it in your return, but if the supplier, the person whose liability was to pay the tax, if he has not paid the tax, the system will itself reverse the input tax credit that you have availed. There is a procedure for it. We will see how it is. Till now, we haven't been doing it. We have been doing reversal of ITC, but the word auto was never there. Whenever we reversed input tax credit in our systems till now, whether it is service tax, excise, or even VAT, we have been using the process of assessment, giving notices, and passing orders. We have concept of ledgers. I think this must have been covered by now, or somebody, whoever is doing payments, will be covering. Ledgers is something which in VAT administration we have not been very familiar with. Excise department used to have ledgers, but quite some time in past they did away with it. But in GST, we realized earlier ledgers were not there when the design was envisaged. But with course of discussions, we realized that unless we have ledgers, a lot of things are becoming more and more difficult. So basically, ledger what means is that once you pay tax, say for example, you actually don't pay tax for a particular requirement. You don't say that I am paying tax for this month. You actually just pay tax. And then you utilize it for payment of taxes for a particular month, like input tax credit. Like input tax credit, when input tax credit accrues to you, when you avail input tax credit, it is not for a month. It just goes to your credit. It goes to your opening balance and to closing balance for a particular month. And then you can use at your will. Similarly, cash also is being treated the same way. So we have three ledgers: cash, credit, and liability ledgers. And as I said, there is no revised returns in GST. And we will see why there is no revised returns. It is through a process of amendments. And in GST return format, we will see that there are tables for amendments where we do not change the return itself. So suppose in month of April, I have filed a return, and in month of September, I realize that there were some mistakes in the month of April return. Then I don't revise my April return. I amend certain details declared in the month of April in month of September. That is how correction will take place. So these are few features which are slightly different from what we have been seeing till now in our returns. None of these features were there in our returns, any of our returns, whether it is central government or state government. Now, what is the return that a particular taxpayer will be filing? Now, many people have been saying that there are 3 returns. Many people have been saying that there are 8 returns in GST that everybody has to file. But actually speaking, there are 3 formats. It is part of the same return, and we will see how it is part of the same return. Basically, this is the return which a particular taxpayer has to file. And for certain conveniences, actually for the convenience of taxpayer himself, it has been split into 3 parts. So first, a taxpayer files his statement of outward supplies, which is, we can say, is like an annex to the return, but has been filed before the return has been filed. Then he files statement of inputs inward supplies, which is again like an annex to the return, but has been filed before the return. And then he files the return. And we will see how it is not a very complicated thing, because I mean, it will just take 4 or 5 slides as to how it actually eases the process. But earlier when the design was made, around 2.5 years back, they were all to be filed on 20th. So all GSTR 1, 2, 3 was actually, it was one format. And this was called, this was Annex A and this was Annex B to the same return. And then we realized that we are duplicating work of the taxpayer by doing this. So, and not only duplicating, actually just by changing the dates, the work of taxpayer has gone down by almost 60-65% by doing this. So that also we'll see how it happens. So we will cover the statement of outward supplies, which is one of the most important statements from detailed return that a particular taxpayer will be filing in GST. GSTR1 is the return which any taxpayer has to file every month by 10th of the month for the previous month. And if every taxpayer in this country files GSTR1 successfully, we have implemented GST successfully. That is the importance of this statement. Okay. Now, this is part of the booklets that you have. It has a header, which is like basic details of that particular taxpayer, his GST name, tax period for it, which it is being filed, and blah, blah, address. This is all will be auto-populated, because if he logs in, because it is system-based return, he has to file it electronically. The moment he logs in, the system already knows all these details, so he doesn't actually fill it. So, but because it is a format, it has to have it, because he signs on it. And so the next is invoice level details. This is one, the second bullet. This is the most important information that goes into GSTR1. Invoice level details have to be filed for all B2B supplies, irrespective of their value, irrespective of their nature. Value means the turnover, nature means whether it is intrastate or interstate. So in GSTR1, invoice level details have to be given for all B2B transactions. B2B supply means this B is registered, this B is registered. That is what B means. B actually doesn't mean business or corporate entity or things like that. It only means both people on the side of these two are registered entities under GSTN, under GST. So this B has GST, this B has GST. If both have GST, then the invoice level details have to be submitted in GSTR1 for all supplies irrespective of the value, irrespective of the nature, whether it is intrastate or intrastate. In addition to that, invoice level details of supplies above 2.5 lakh which are interstate and have been made to a customer, that is C, they have to be filed. So other than B2B, that is B2C supplies, for all B2C supplies, invoice level details have to be given for only those B2C supplies which are interstate and are more than 2.5 lakh. Okay. Huh? There is no significance. We'll cover this and then I'll take questions on this particular slide because this is a very important slide. C means non-registered entity. C doesn't mean final customer only. It means only interstate, only interstate. And when we say invoice level details, what are invoice level? That is also a lot of confusion. Many people think that they have to scan the invoice and upload it. Many people are thinking that they have to generate invoice on the GSTN system only. It is not that way. These are the details that have to be filed for every invoice. That is GSTN of the recipient if it is B2B. If it is B2C, obviously GSTN of the recipient will not be there. Okay. Invoice details. That is detail of the invoice. Every invoice will have some detail. And what is the detail of the invoice? That is the invoice number, the invoice date, the invoice value, HSN and SAC code of the commodity being sold in that invoice. HSN is homogeneous system of nomenclature. SAC is service accounting code. If it is service, it is SAC. If it is goods, it is HSN. There is a hierarchy of usage of HSN and SAC. If you see the return report, it says that dealers, suppliers below to 1.5 crore turnover, they don't need to give HSN at all. So for them, this is immaterial. Between 1.5 to 5 crore, they have to give 2-digit HSN code. Okay, 2-digit means there are 99 values. There are 99 values of HSN code. There are HSN classification is divided into chapters. So 2-digit chapter is there. So they have to give the chapter of the commodity that they are selling. And if they are above 5 crore, then they have to give 4-digit HSN code in their GSTR1. If it is export, import and all, they have to give 8-digit. Even now they are giving. So they give the HSN code of the commodity being sold. They will give the taxable value for that particular commodity. Okay, so they give the invoice number, invoice date, the HSN code of the commodity being sold, the taxable value, tax rate and tax amount. If it is interstate, it will be IGST. It is intrastate, it will be CGST and SGST. So tax rate they will mention and tax amount will be mentioned. And the place of supply, which is relevant only in case of interstate. Place of supply, they will give the state code of that place of supply. As to if it is an interstate transaction and IGST is the tax payable, then to which state the supply is being made. If it is goods, where they are being delivered. If it is supply, where it is being, if it is service, where it is being provided to. So these are the details which have to be entered for every invoice. Now, if an invoice has lot of commodities, but the HSN code is the same, 2-digit HSN code is the same. For example, if I am selling nuts and bolts, and nails, screws, but they are all made of steel. Okay, so items made of steel, it will be one chapter. So for the full invoice, I have to enter only one. Most of the dealers actually will be wholesalers, stockists and all. They will dealing with only one HSN code. So I will only give one HSN code. If I am selling 10 commodities in a particular invoice and it has commodities falling in two chapters of HSN classification, then I'll have to enter 2 lines for the same invoice. That is how this is structured. So any question on this slide, because this is the most important slide that I will be telling. No, only the state where it is being delivered to. They will only be mentioning a code.
Even for B2C supply also,
Yes, yes, yes. B2C, so anyway it is interested in this particular table. So in B2C definitely they have to mention. In B2B, if it is local supply where SGST and CGST is being levied and both the business entities are in the same state, then the place of supply will be the same state. Normally, it will not be in all cases. That will be covered on the last day, I think. There is a session on place of supply itself. It's a no, only taxable. Taxable value, only taxable values. Non-taxable, there is a different table. We'll come to that. This is only taxable. Yeah, please. That will come. On this slide, if you have question, what is outside the scope of this slide, we will see how it is covered, because what you are asking is the first point in the next slide. No. If he is registered, he is B. We will see why it is required. See, whatever you give here as invoice level details gets auto-populated in my purchase statement. Now, the purchases of composition dealer is also taken. So, therefore, it is better to take those supplies also. Yeah.
Sir, in one invoice, there may be 2 or 3 different rates are there.
So, different rates are there. Yeah.
So, there will be a specific columns for that particular thing.
In the, yes, it is there, no? Rate.
You are talking that there is an invoice page. So, in one invoice itself,
two different rates, two different entries have to be made.
multiple commodities will be there, multiple
Rates, yes.
So, provisions are involved.
Yes.
So, actually, it is not based on invoice, it is based on commodity.
No, not commodity. Commodity grouped at the level of HSN classification and rates. See, normally what will happen is that in an invoice, two rates in a B2B transaction will not be there. See, this is not a B2C sale. It is not B2B. B2B. See, normally B2B, if I am a business purchaser, I am buying my raw materials. My raw materials, suppose even if they are different, suppose I buy lubricants as well as steel for making my ultimate. So, steel I purchase from one fellow. The same fellow will not be selling lubricants to me. So, normally B2B transactions, such complicated transactions are very limited. They may be there. I am not saying they are not there. Say for example, there is a contractor. He is buying construction material from plumbing material from a shop. So, he is a contractor, so he is a B. And he is buying PVC pipes, steel pipes and ceramic fittings. They all may be sold from the same dealer also. It may be possible. There are dealers which are selling ceramic fittings also, PVC pipes also. So, in such cases that invoice may have multiple commodities. But in our experience, we have seen that in a B2B invoice, very complicated invoices are there, but they are limited. But if it is there, to answer your question, if there are multiple rates for that particular invoice, he will have to give multiple lines. So, the invoice number remains the same, the date remains the same, tax rate, this tax rate, taxable value, the same invoice number, same invoice date, different tax rate, and what is the different taxable value and tax amount.
So, no, this HSN code will capture the commodity.
No, it is only the chapter.
So, if a particularly the department wants to know the commodity wise.
For analytical perspective, if you want commodity details, it will come in the annual return. Invoice level, why do you want to do analysis?
No, it's not invoice. Invoice itself will become a return. Return will become annual.
No, that kind of aggregation may not be. Asking commodity level, what happens is you make this complicated. See, this particular table which is being taken is for the specific purpose of invoice level matching. Okay. Matching. So, because we are only doing matching, we can make this as complicated as you want, but you would appreciate that more you make this complicated, more administratively difficult it becomes to get this information. So, this is the find back. On HSN code itself, whether HSN code should be there or not, 3 times discussion has taken place in the committee, and 3 times it has been decided that it should be there. But it has been decided that two digit for 1.5 to 5 crore. That too optional in the first year. I mean, there is a staggered view. We'll see how it is. In the report also it is mentioned in detail. For 1.5 crore to 5 crore, it is optional in the first year. From second year, it is compulsory. And from 5 crore to above, it is 4 digit. Yes, sir. No description. Only SSN code. No description of the commodity.
Taxable value.
Yeah.
There are different rates. Each taxable value.
For each tax rate, what is the total value of the sale being made?
Total value of for each you have to give the value.
Of each, under each tax rate. Under each tax rate. No, each invoice. One invoice. No, in return it will come. Here it will not come. This is only invoice level details. This is the first table of return. No, slides don't have. The note has. The document has it. Huh? I don't recall. I think that is also 4 digit, I think. 4 digit. They don't have it. But the returns have it. But the 8 digit. I was told 4 digit only. But whatever. I mean, I was told that service providers are all very well aware of SSCs. See, advantage of service provisioning is that a service provider does not deal with more than one services, whether big or small. It is unlike people dealing in goods. A person dealing in goods may be dealing with many goods. See, Metro Cash and Carry sells almost some around 20-25 HSN codes. But that kind of people are not there on service provider. If he is providing one service, one fellow provides only one service. He doesn't provide second service at all, as big as he may be. So, but I mean, we have been told that service providers are very well aware of SSCs. So they will be very happy to give it.
It is the other way around. Services are numerous, codes are limited.
Huh?
It is the other way around. Services are numerous.
Okay.
But codes are only 190 or 150.
Okay. Code. No, codes. I'm not saying codes. I am saying that a particular service provider does not provide services belonging to 2 codes. So if I am a telecom service provider, I am not providing financial services. That is what I am saying. So no doubts on, no further doubts on this slide. B2C, no, GST will not be there. It will be blank in place of GST. If he is a ID, if he has a GST ID, that is unique ID, then that unique ID will be mentioned there. Otherwise, it will be blank. Which one? See, this statement of outward supply is originally provided by the supplier. He has to provide these details. How he does it, we will see in the last slide. Various options are being given to him. He can completely log in, and like you do your email on Gmail, you can enter there also one by one. Otherwise, they will also provide some kind of an Excel utility where you can offline keep entering and at some point of time upload all of them. Or they are also saying Tally. If you are using from Tally directly, you can upload. There are many people who are developing some app. So in the evening, you enter all your invoices in that app and upload it. That we will see. But on format, if you don't have any doubts, then we'll go to the next slide.
GST and price of supply.
Yeah.
Once we fill in GST and the price of supply can go automatically down.
No. The answer to this no will be made to known to you in subsequent sessions. Maybe on the, I think the second last day or the last day. Why it will not be, may not be, is a very complicated question. Let us not get into that. But these two, in many cases, this and this will be the same, but may not be, and that is why this column has been provided. State, only state. Okay?
GST includes a state.
It includes states.
That state code can
No, it
come from.
No, it can't. That is what you will be answered this question by the 5th day. You will have the answer of this question that it may not be. And the person who takes the place of supply session will explain you why it may not be, and you will really appreciate that fact. Yeah, nothing? Okay. So the second part is the details of supplies to customers, that is B2C, less than. So what is left out of this? That is all intrastate B2C supplies, all of them irrespective of turnover, and interstate less than 2.5 lakh. All those on an aggregate basis, HSN cohort wise, place of supply wise, and tax rate wise, aggregate value of that supply has to be given. Okay. So if I am a dealer dealing in two HSN codes, for both HSN codes I have to give the total value of supplies made. If there are multiple rates, I will have to say under which rate how much has been given. And if I am supplying to more than one states, B2C, this is only B2C. But suppose I am supplying to customers in more than one state, then I have to give place of supply wise also. So from Kerala, if supplies have been made in Kerala itself and to Tamil Nadu and say for example Karnataka, then that split also has to be given. No, you actually take only taxable value. See, value, you are talking about this value? Yeah. See, value is something, is the total invoice value. That is for identification of the invoice. This is taxable value is for that supply. Yeah. Okay. Then these are the, so these two tables give the details of the supplies itself. Invoice level details and aggregate details of the supplies being made. After the details of supplies being made are the details of credit notes and debit notes. In GST, our assessment is credit notes and debit notes will be used very extensively, and we will by the end of this session itself we realize why. For credit note and debit note also similar details will have to be given. They will give the document details, that is the credit note and debit note detail. They will have a number, they will have their own date. They will have to give the original invoice number for which the credit note or debit note is being issued. Okay? And the differential amount of the taxable amount and the tax amount. So if it is a credit note, I am actually reducing the value of the supply, and therefore I am also reducing the tax payable. If it is a debit note, I am increasing the value of the supply and therefore the tax amount. No question on this slide? This is very simple. That we will cover. What it is coming later as to what, how it is, what section 24 talks about.
Single credit note and debit note can relate to multiple.
No. That the section 24 prevents that, because it makes life difficult. See, till now it was a non-computerized environment, and even if it was computerized, it was manually computerized. Now because you have things like time of supply and place of supply, you can't have a credit note which is linked to multiple. Suppose you change the tax rate in between, then what is the tax, that differential tax, how do you calculate then? Or for example, every credit debit note for example will come with an interest liability. Now if multiple invoices are there, how do you calculate the interest liability for a credit note? It becomes complicated. So that is why section 24 provides that every credit note has to be linked to an invoice.
For example, in the case of a class or something like that, classes,
Yeah.
where the number of invoices will be many, there will be damages from the part of the purchaser.
Yeah.
So normally they will issue
Huh.
a consolidated credit note
Huh.
for more invoices.
Yeah.
In that whether it will be taxed.
No, he will issue now multiple.
Multiple invoices.
He will issue multiple.
Related to a particular invoice. For example, I am selling the particular people.
No, you are saying I issued 100 invoices for the full year.
No, for 1 month, 10 invoices.
10 invoices.
And he says that out of that, 5% is a damage.
Huh.
So I will issue a credit note.
So now he will issue 10 credit notes.
Oh, that's a very impressive.
But he issued 10 invoices, no? When he
This is a total to a single supplier.
No, correct. But when he could issue 10 invoices, how come issuing 10 credit note become cumbersome? 10 invoices didn't become cumbersome?
No, he said that for the last, it is all the, so it's my example. The invoices are all credit invoices.
Correct.
So you will be pay only at one payment. So in one payment, I will say that.
But why did he issue 10 invoices then?
Eh?
Why did he issue 10 invoices?
No, different dates of.
So that is what I'm saying. So because now 10 invoices have been issued, see, When settlement of 10 invoices happens in a credit note, the calculation will be done invoice wise only. After doing the entire calculation, he is issuing one credit note. Otherwise, he is calculating the damages per invoice only, because the value of supply may be different in 10 invoices. See, suppose cement. Cement is one industry where damages are there because it can become wet, it can absorb humidity. So, the first layer on the in the front will absorb humidity, and those bags will go bad. Now, if I have given multiple supplies, then those multiple supplies may have different values. So, suppose 5 bags of cements in a particular consignment have to be written off. Okay. So, I have to apply that value for that. Now, after 10 days, I gave another consignment. So, their taxable value may be different. So, I have to calculate 5 bags there means how much value. So, anyway, see, when the credit notes also have to be issued, the value of internally I am working out invoice wise only.
Practically, I have some doubts on that only. For example, in your example, cement, in which the credit note will be issued in order to give some kind of discount also. The credit note includes discount.
Correct. See, no. See, discount, it is very clear.
It is based on total turnover.
No, total turnover discounts GST does not recognize, and that is supported by law. That is supported by MRF judgment, which says if the discount is supply related. See, if I give you discount because I like you, you are a very loyal customer and I like you, and therefore I give you a discount at the end of the year.
And that is a promoting competitive.
Correct, you promote it. Now, suppose I give you a gold chain instead of money, discount, okay. Will you reverse input tax credit for that gold chain given? No. What I am saying is cash discount is, see, whatever is related to supply only is GST operations can happen only something which is related to supply of goods and services. You like somebody, you gave him some discount because you liked him. On a total basis, you said, okay, I like you, I give you 1 lakh discount total. See, that is not related to any supply. It is like giving him a free ticket to Bangkok.
It is only reduction in his payment.
That is what. So, see, so we are saying credit and debit notes you are free to issue.
Without any tax, it won't come here. If a debit note,
otherwise, he can issue whatever he wants. If he does not require, if he is issuing a credit note, debit note, net of tax,
without tax,
then there is, he does nothing. No. It is a cash settlement between the two then.
okay.
Any other doubt? So, this is one particular point which many people ask as to how can I issue thousands of invoices, now I have to issue thousands of credit notes. So, the answer is that if you could actually issue thousands of invoices, there is no problem in issuing thousands of credit notes also. Because see, he has to calculate the liability here again. The system has to calculate the interest liability whenever you upload a debit note. Because see, it is entry only. See, we are not, as I said, this is not that he is uploading the credit note.
Yeah. So if you have one credit note covering many invoices, can't you repeat the same credit note number for different invoices?
Then give credit note, different credit note number also. If you can repeat it, see, credit note number, there is no premium on it. Not that credit note numbers are being auctioned and sold somewhere. He has to generate the credit note number. If you could generate table with the same credit note number, 100 entries, might as well generate 100 credit note number. What is the problem?
I think this thing is like we are handling invoices and several line items classified based on the HSN code. Similarly, there can be a single credit note. It doesn't actually.
It doesn't matter. See, I'll tell you, the problem is if you use the same credit note number, matching becomes difficult. Because then what you match? There are anyway 100 of those. So how do you match them? With the same date, there are hundreds of credit notes with the same number also. Yeah.
original invoice number is the issue.
Yeah. Original invoice number, see.
So you cannot connect it. That is what they say is that a particular return may be linked with an original invoice, may not be may be an issue to a dealer. That's it. So what you are saying, I have understood that. If a credit note which contains a tax element, you should linked with the original.
Original invoice. Otherwise, how can you link to a tax at all?
There is a tax element, it should be linked.
Yes. So, no doubt on this?
That would be a deeming fiction there, so like something is in like bulk received.
Correct, correct.
To connect, that's what.
See, wherever it is bulk, unfortunately, in MRFTR judgment, Supreme Court has said, if a discount is given for a if a discount has been given, which was not known at the time the supply was made, then that is no discount. You do it, no tax implication for that. And that is what section 15 talks about. So section 15, if you see, that somebody must have covered under the valuation session, which says there is if you see clause, I think H or something. If you see clause H under subsection 2, there is a proviso. The first section says any discount incentive that may be allowed after the supply has been effected, that will not form, shall include such discount, provided that if the post-supply discount which is established as per the agreement and is known or at or before the time of supply, that can be excluded from the valuation of supply. Only that can be excluded. So at a point like cement industry, as I said, or pharmacy industry actually does that. So they can keep supplying you all the tablets that they want. At some point of time when the drug control, suppose a new medicine has come out, I actually keep supplying at some value. And the drug controller has not given the valuation for that particular pharmacy preparation. Then they will issue a credit and debit note at some point of time when the price is fixed. So on those cases, it is well known that the price will be fixed later. Gold, it is a very known thing on gold. Transaction will take place today, but the price will be arrived between us at some point of time at a later date, because today what the price of gold was there may be known after 2-3 days. So at that point of time I settle. So those kind of things, it will be there. And what we are saying is it is invoice linked. Because see, otherwise in GST it becomes very difficult to administer. People will use credit and debit notes to evade tax.
So in original invoice you are not asking any discount?
No. Original value is taxable value.
No trade discount is reflected in the original invoice.
If it is there, it is part of taxable value.
Taxable value.
Taxable value is for us.
So it is less
Whatever.
Less discount.
It doesn't matter whether it is taxable value finally on which tax will be levied and paid to me.
Say in pharmaceutical, there will be quantity discount is also there.
If it is there, put it as part of taxable value. See, whether on quantity discount whether tax will be paid or not. We are only bothered about taxable value. On that tax, what he pays to him in his bank account, what settlement takes, none of our business. On this taxable value, this tax rate will be applied and this tax amount will come, is our botheration. And this tax amount which you have calculated in your invoice, shown in your invoice, you have to collect it from that payer. It will be presumed that from the buyer you collect it and I will recover this tax amount from you. Then there are certain details. If there is a reverse charge, there is a separate portion in the table for reverse charge. Details for exports, invoice details will come, number, date, shipping bill number, bill of export number, whenever they come, tax details for, because export I can have with payment of tax or without payment of tax. Then details of exempt, nil rated and non-GST supplies. This is aggregate, it has to be given. This has no tax implication, but this is mainly for reconciliation purpose. So for example, if I am a books and stationery shop and I sell books as well as stationery, books is exempt, stationery is not. So when I say total sales I have made is 100 and these tables only show 40, then the remaining 60 must be exempt, nil rated or non-GST supplies, and you asked somewhere there. So for those details, I only will be giving aggregate, which will enable me in reconciling my total sales of this particular month and the tax paid, and will be helpful in preparing the annual return. Then in GST there is, if you see section 12 and 13, there is something for advances. Tax has to be paid on advances paid because the time of supply and rules. So if he has paid, there is a separate table for declaring tax paid on advances and a table for adjusting those tax which has been paid on advances. Then we have amendment tables for each of these where I can amend the details given for invoices, credit notes, B2C supplies in previous months. So I can say in month of, if I'm filing the return for month of September on 20th October, then I can say that in month of April, this particular date, this invoice number, I had declared this taxable value, this rate, this tax amount, but actually the taxable value, tax amount is this, or GSTN is this, wrong GSTN was communicated, wrong date was given, wrong tax invoice number was given, wrong taxable value was given, or wrong tax rate was given. So I can correct in my September return, I can correct the invoices of month of March, April. And that is why it is very important to understand that in a particular GSTR1, because I am giving transaction details like this. So suppose in month of April, I have listed some 200 invoices. And at some point of time, say next month itself, I realize that out of that 200, 10 were wrong. Okay. Now asking him to upload a revised return again and uploading the entire 200 invoices again, out of which only 10 were wrong, is actually increasing his job only. So what we are saying is that 200, let it remain like that. You just correct those 10 invoices by using the amendment table in the return in which you are submitting. That is what it says. So this is the statement of outward supplies finishes here, and then we come to statement of inward supplies.
Sir, in the previous slide,
yeah,
that tax paid on advances, say for example in the month of April there is a transaction which is envisaged and say worth 10 lakhs.
Yeah.
And I receive an advance of say 2 lakhs. And in May I actually make a supply and make an invoice for that. Should I have an invoice for receiving that advance? How is it captured here, and how is the actual transaction? How does it work?
So if I see, this is not there in goods as of now. There is nothing called advances in goods. In goods, if it was to happen as it happens now, if I have for 10 lakhs, suppose it's a car, and 2 lakh advance has been taken, then 2 lakh advance will be taken. At the time of supply, 10 lakh invoice is issued, and it is shown that 2 lakh advance was taken and the amount payable is 8 lakh. Okay, this is how it will happen. Now what will happen is that when he pays 2 lakh, he also pays tax on it. So 20,000 tax also he pays on it, or 40,000 tax also he pays on it. Okay. Now when he issues a invoice of 10 lakh, he will say advance already received 2 lakh, tax paid on advance already paid this much. So amount payable only 8 lakh, and amount of tax now payable only this much. So when he uploads an invoice of 10 lakh, but the tax payable is less because some tax has already been paid, and that is what adjustment he will be doing in this table. That is how it is. It's slightly complicated, but it has become complicated. Many people are protesting that on goods you remove it now. You go to what previously we had. Don't have it on advances at all.
But how will we match against individual?
No, we can't. We will only match invoice. So what will happen is that in the invoice, because he will say tax payable. So when I say taxable value is 10 lakh, and the tax amount is the tax on 10 lakh. Suppose 20% is the tax, it will be 2 lakh. Okay. But the tax payable will be less in that particular month for this guy. But the input tax credit which will be available to that person will be 2 lakh only. So the invoice remains as it is. It is only the tax payable in this return is less because some tax has already been paid. That is the only difference which happens because of this advance feature. Any month, any amount of amendment. We'll come to the amendments. There is no limit to making amendments. See, it is system based. As I said, I mean, you revise a return somehow or the other, but you don't file a revised return for the entire month. And that item you change it.
And it will appear.
It will appear. Yes.
The original and the thing will be appear.
Yes. So the original will go into the database archives. The new one will replace it.
So how is the amendment take effect automatically?
System will take it. Because see, what you do is, you say this is the invoice number. It basically changes the invoice entry itself in the database. That is what it does in plain terms. It removes the previous entry and replaces it with a new entry. So suppose I increase my taxable value, I pay interest on it. Because it is in that month that I am increasing my taxable value, and therefore I have to pay interest on it. If you reduce, there is no refund. Okay. So then we come to the statement of inward supplies. It is just the mirror image of statement of outward supplies other than B2C, because there is nothing like B2C, there is no inward supplies from a C. In that we have the basic details. The statement of inward supplies, most of it will be auto-populated. So on the 10th of the month, when everybody has filed their GST R1, the system has the total view of all the outward supplies. So when I log in, it will show me the statement of my inward supplies in all those invoices where I am the recipient. So if wherever these invoices where it is my GST as the recipient, that will form part of my inward supplies. So all the auto-populated outward supplies will form part of my inward supplies. Now suppose I find that some of them are not there because the supplier did not upload, then I can go ahead and claim them. I can upload them separately. So they become claimed, not auto-populated ones. Then there are supplies attracting reverse charge, which are basically my own outward supplies. In the invoice level details that we have, it is almost the same kind of format. In addition to everything else, there is a column for eligibility of input tax credit, because there may be some invoice on which ITC may not be available. For example, if it is foods and beverages. So suppose a food and beverage invoice has been issued to me, then it will auto-populate because somebody has uploaded it, because he has to pay tax on it. But I cannot take input tax credit on it, but the system does not know, so it will auto-populate into my GSTR2. It will say this is your invoice, you are recipient. But I have to untick it, saying that ITC is not available on this invoice. To that extent, ITC will get reduced in my GSTR2. Import of I claim. No. He has not uploaded.
That particular person has
not uploaded. By mistake, he missed it. But see, you can.
There are other aspects of it. He has mistakenly uploaded that I have purchased.
Huh. Then you just don't include in your GSTR2. So what will happen? System will show you a draft saying that this is how your GSTR2 should look like. Then you say, please remove these items.
I can easily.
You can remove it. Then you can say these are wrong. You please edit them. So I want to change them. So you change it because some zero has been left out or something has been left out, number has been mentioned wrongly, date was mentioned wrongly, something like that.
So what are auto-populated, I can correct.
Correct, completely. You can delete, correct or add. Tax is not payable on it, no? See, the C was not liable to pay tax. And you were not liable to take input tax credit on it. Even then, you exempted that fellow, no? See, C to B supply means his turnover is less than 10 lakh, isn't it? That is how he is C. No, but then he is liable to be registered then. If he is, see, who is C? C is a person who is not registered. Okay? If he is not registered, therefore he is not, either he is not a supplier. If he is not a supplier, C to B supplies don't, see, if you are not supplying, how can there be a supply from you if you are not supplying at all? But if there is a supply from you, that means your turnover is less than 10 lakh. Or no, see that is purchase tax. That is a different tax. Now you are saying that rubber, the seller, either he is exempt under the law to sell, to register. Suppose he is an agriculturist. So he is selling rubber and you exempt him by law, saying that although you sell more than 10 lakh, but you are exempt. So therefore, no tax is levied on that. No, now it is exempt. On that sale, GST cannot be levied. It is a neutral transaction. Let us appreciate.
A particular rubber dealer, he is a first dealer in Kerala.
Yeah.
He purchases from various agriculturists.
Okay.
In which there is no invoice at all.
Yes.
So how that particular dealer may be having 100 crores of rupees of his turnover?
Sale turnover.
Sales only. Purchase turnover, there is no invoice at all.
Okay.
So invoice will be there, but there is no taxation, nothing is there.
Nothing is there.
He is purchasing from various dealers.
Yeah.
In what way he will do that?
No, he will not do.
He will not.
He will not do because see, these are taxable inward supplies because on this he will get input tax credit. if there is a non-taxed inward supply by law,
Non-tax inward.
if it is non-taxed, he doesn't get input tax credit for that. So we are also not bothered.
He did not want any.
He did not.
So his output only will not get.
Yes.
No inward.
No, because he doesn't get, no. No, you see, it is an exempt purchase. No, see, this is not on evasion. This session is not on evasion. That we will handle separately. One session will be there, how he will handle evasion. See, evasion he can do in 100 ways. That is a different aspect. On return, there is no need to show that he purchased from an unregistered dealer. He need not show invoice level wise. We have a table where he can show exempt supplies. That is at his whims and fancy anyway. Even today, whatever information you take it from him, he can still evade. Isn't he evading today?
So it is not an inward supply at all.
It is not. No, it is inward supply, but it is exempt. It is exempt under GST.
But that should be required to the inward supply.
It is. This is the first slide. Like outward supplies, we had 3 slides. This is the first slide. Okay. So then, he again gives the credit and debit notes which were issued to him. Okay. He gives the details of ISD credit received, which must have been covered by now. He gives the details of TDS credit received, which also must have been dealt by now. We all know actually most of these. And the other details of inward supply, what you were asking. Exempt, from composition dealers, nil rated, non-GST, everything. So he will give these details if he wants to. As you can see, this is at his will. Whatever figure he gives you is a declaration, that's it. I mean, it is a format. If he doesn't give you, it is nil. The figure is 0 therefore. Yeah, it is aggregate.
By law, he is mandated to give.
Yeah. If he doesn't give, he gives wrongly, you can catch him. But there is a column to give. If he leaves it blank, you can presume it he has given 0.
For playing not auto-populated, is there any restriction?
No. We will see how it is handled. But there is no restriction. It is his statement. I mean, this is statement. This is an era of self-assessment. This is his statement. How you will handle it is your business. How he will claim it is his business. He can claim for the moon actually in this. Okay? So these two finish the statement of inward supplies, and then we have returns. We have taken all the details from him by now to completely automatically generate the entire return to be filed by him. So in his return, he doesn't even raise his pen. Everything auto-populated based on GSTR1 and GSTR2, other than this item, that is payment details, because now he makes the payment. So he says that the system tells him from your GSTR1, these are your outward supplies. From your GSTR2, these are your inward supplies, and therefore this is your ITC available in this particular return. You have your opening balance. This is your total ITC available. This is your tax liability completely, which comes from the outward liabilities. Then you have certain changes you have made in amendment tables, which will increase or decrease your liability. And you have some reversal of ITC, which we will see how it comes. It will get added there, which will give him his total liability.
This is system generated.
System generated completely till here.
So that is adjustment regarding first CGST, SGST, everything.
Everything. Because he has given you all the details, you asked him. And then he says, because he has ITC available, he will utilize the credit of ITC for payment of taxes. After he is utilized, he still has to pay some amount in cash. So he will say, this much please debit my cash ledger, and he says submit. When he says submit, all these things will adjust, his payment will take place, ITC ledger will be debited. He can also give a claim for refund of ITC or cash ledger. So suppose I have inverted duty structure and I am accumulating ITC, then I can claim for section 16 allows for refund of ITC, so that refund can be claimed in the return itself. Similarly, if I have by mistake, if I have paid more amount in the cash ledger, I can ask for refund of that amount from the cash ledger. So that's it. That is the return.
Claim for refund is part of the return or it's a separate?
No, if as of now the format stands and the business report stands, if you want a refund of input tax credit where you have inverted duty structure, or you want a refund of the credit in your cash ledger because you have an excess in your cash ledger, that can be done through the return itself, and that will be taken as a refund application. If you are an exporter, then your life is slightly complicated because you have to give proof of export and all. So there will be a refund form. Sir, here because funds will be done on a gross basis. Yeah. So what?
Inflow to the state of In GST portion will come only once in a month.
No, what taxpayers pay, that will happen on a daily basis. But only IGST settlement will happen. But taxpayer, whatever he is paying, that will happen on a daily basis. So what happens? How payment takes place is that I fill in a challan. See, the way payment happens is like this. No, in the sense that as and when the guys pay, see, if you have 2 lakh fellows, everybody doesn't pay on the same day, no. So whoever pays on whichever day, the credit you get on the next day.
On 25th, the last day, most people will give on the 25th only.
20th now.
20th.
If you have 25th, now it is 20th. Yeah, but see, many people will not pay on 20th. People will be paying on 21st, 22nd also.
Maybe 2-3 days.
Yeah. People keep paying till 30th also. Yeah. So wherever he says, I want a refund of ITC, that much ITC will be blocked in his ledger for further carrying it forward. That will be part of the ledger. Only inverted duty structure and exports. That is section 16. Okay? So no, there is some restriction given. I think the end of the year or something is there. That refund whoever will cover, I think it is end of the year if he wants to. Yeah. Every month is very complicated. But this cash ledger, I think, is every month you can do. Excess cash. Yeah. Which agency? No, even see. No, it is like this. See, it will not be 3 times a month is in such a way that the interaction between the taxpayer and say the TRP, the tax return preparer, is only for GSTR1. GSTR2 is auto-populated. After that, in filing a return, anyway you can't touch anything. Now that you have filed your GSTR1, GSTR2, see, that's what I'm saying. It has been split into 3 portions so that it can be auto-populated only. Otherwise, we could have asked him to fill GSTR1, GSTR2, GSTR3 on the same day, and then at some point of time told him that your GSTR1 and return does not tally, your GSTR2 and GSTR3 don't tally, or your GSTR1 and somebody else GSTR2 doesn't tally. So this system, what it does is, by staggering it, it removes this kind of problem. Where you say, if you have filed your GSTR1, if you have filed your GSTR2, your GSTR3 is like this.
Then the dealer can see the tally also.
Yeah, we will see how it happens.
So it can be done on the same day also.
No.
GSTR1 and 2.
No, see, because you have to give some time to people to react to what has come. See, it is like saying that I suppose GSTR1 is filed. So before I can show your GSTR to you, or not show, but tell you that your GSTR2 formidably will look like this, you also need some time to react. No, you can't be told that you say yes or no now only, because you may like to upload, you may like to change it. It is your statement. It can't be forced upon you. So that is why 5 days have been given for you to react.
But how soon will it reflect on my GSTR too, sir?
I'll tell you that also is coming. So now, what are the salient features? We just understand this. It is mostly based on timely filing of GSTR1. On 10th, if you file your GSTR1, it will auto-populate somebody else's GSTR2. If you don't file your GSTR1 by 10th, GSTR2s will be nil. Okay, isn't it? So this is very critical. And then, because GSTR2 is auto-populated from GSTR1, there is a certain hierarchy between GSTR1 and GSTR2. Although finally on 15th when both are filed, they are equal. But because there is a hierarchy in preparation, that time difference has been kept. As I said, some additional details are there in GSTR2, like claims are not there, details of import will not be there because it is a reverse charge. Then some other inward supplies like exempt and all. So when I have to file my GSTR2 to answer your question, there are very less number of details which have to be entered. So when I give information to my tax return preparer, I actually give him the information in one go only. I don't go to his house every time for GSTR1, GSTR2, GSTR3. I give the information to him in one go, and then he sees how it is to be done. In fact, if you see Tally, the way they do Tally 9, the way they are doing, the tax return preparer will have access to how invoices are being issued. They don't even need to interact.
Sir, GSTR1 is open all the days.
Yes.
So it's not on 10th.
No. Yeah.
It's a due on
Yeah, that also I think, that is, next slide is that only. Then HSN code, this we have already discussed. So GSTR1, there is a long rope given. So for the month of April, if GSTR1 has to be filed, from 1st April till 10th May, I can keep filing my GSTR1. Okay? And the other party can keep viewing his GSTR2. I can actually file my April GSTR1 if I want on 1st April also. If I know that I won't be making any taxable supply, or one taxable supply I had to make and I have made it, okay? Then I can file my GSTR1 on any given date. And the other fellow can keep seeing my his GSTR2. Only thing is that he can't file his GSTR2 because the GSTR1s can still be modified. So on 10th, when GSTR1s are modified, I can actually see my GSTR2. But GSTR2 I can actually keep watching as and when GSTR1s are populated. That is how system is being designed. So suppose I am purchasing a particular consignment. Suppose I purchase chemicals. Suppose bleaching powder I have purchased. Then I can ask my seller to upload that invoice now itself. So I can tell him that when you send my consignment of bleaching powder to me, please upload my invoice also. Otherwise I will not make you payment. Yes, correction time, yeah, because you can keep correcting it till 10th. Correct. So I can keep watching at 10th, all GSTR1s are filed, nobody can now further change a GSTR1. So my GSTR2 is prepared, I can make amendments to it, and by 15th I can change it and submit it, my final GSTR2. If I have made some changes to my GSTR2 as compared to what GSTR2 was auto-drafted, the changes will be communicated to my supplier then and there. So suppose I have uploaded a new purchase invoice which nobody had uploaded, that will be communicated to that supplier, and that supplier can still accept it. And then to that extent his GSTR3 will increase because his tax liability will go up by that much amount.
So on May 1st, GSTR1 for the May is open and GSTR1 for the April is also open.
Yes, yes.
GSTR1, does it mean that I can file it before 10 and finalize it?
Yes. Yes.
Suppose I can file it and on rethinking, can I amend it on?
No. Now next month now you can do it. Next month you do it now.
Say my buyer buys enters an additional invoice in GSTR2 of his GSTR2 rather. It can say it's on 12th of the month. I have missed to file it on 10th of the month. Will it show
yes.
in the current month as an amendment?
Yes.
How does it show, or it will automatically go to my GSTR?
It will apply. It will change your GSTR1
automatically.
Sir, and what about the traffic on 10th? Will it be possible?
they are spending 1300 crore on the hardware. Okay, if the system does not work, then I mean, you know, it is a pretty state of art. We have to see how it functions. But they have taken good amount of our well-earned money to put up that system.
No, will it be like the Flipkart sale?
No, I mean, see, let me tell you, the kind of hardware they are putting, now even UID authority has not put that kind of hardware. So it is one of the biggest data centers that is being put up for by GSTN. They have completely overprovided. Because for example, they are saying that every state requires 100 TB of data space. We are managing in 50 GB in Karnataka. So that kind of lot of over provisioning is there. But we have to see, I mean, nobody can say it will or not, but they are aware of the volume of transaction and they have spent good amount of money for that value of transaction. So let us hope that it will suffice. If it does not, then we are doomed.
And the connectivity issue, sir?
Yeah. See, as far as server is concerned, as I said, they have really over-provided. But connectivity at the taxpayer's end is at the behest of taxpayer. But see, for him, the data is not that much.
Questions for GSTN session.
Okay.
Use fixed time for data. All those proposals will be before GSTN will tell us.
So this amendment in GST 2,
Yeah.
when it comes to GST 1, whether it should be accepted.
It has to be accepted. After all, it is increasing your tax liability. Suppose I have uploaded one invoice saying that you have sold me and I want to take input tax credit. What if you have not sold?
Suppose it doesn't.
No, if it doesn't, then we will see how it will be handled. But it will be my input tax credit, but it will not be your output tax. And how it will be handled, we will see in my ITC matching. Yeah.
I have an estimate of various other codes. How do I expect to verify my GSTR to auto-populated details? Whether I will get digitalized data?
Yeah, you will get. So suppose if you are using Tally or SAP, they are making a system where you may have entered your input purchases separately also in the system. So it will show, GSTN shows this, your own system shows this, do you want to merge it? So there they are providing a facility. The good thing about it is now Tally has to deal with only one software. Till now the moment we changed, every state had their own software, so they also were not able to cope up. The kind of IT system that they are putting GSTN, the architecture and all is one of the far-reaching, very best kind of architecture. There's no doubt about that. But how it performs, that we'll see. But as far as the interlinkages and the possibility, it is an open API architecture, what we call, the kind of APIs that are there that will ensure that if, on the other hand, there are many people who are trying to develop this kind of software to ease this process for taxpayers.
GSTR 1 will be my own, and GSTR 2 of mine is maybe so many persons GSTR 1.
Yeah.
So there will be a dealer-wise something will be there, or it will be a mixer of.
No, your GSTR2 is your GSTR2.
No, it will be from so many.
It is sourcing from so many GSTR1.
My GSTR 2 will be mine.
Your GSTR2 is yours. We'll come. Only on GSTR 1, 2, 3, if you have questions, we'll take that much. Okay. So then, these all things have been covered actually. This 17th, the reverse auto population, if somebody has put in GSTR2, he can accept it till 17th so that tax payment can happen on, and then GSTR2, as I said, will be completely auto populated. Now, I'll just cover this bullet. See, when the GSTR3 is filed, simultaneously these 4 operations happen. Okay? On filing of GSTR3, my ITC ledger gets credited by the amount of ITC that is available in my GSTR2. Okay? At the same time, ITC ledger gets debited by the amount of ITC I utilize for payment of tax. Okay? At the same time, my cash ledger gets credited by an amount of TDS which was deducted on my behalf, which is shown in GSTR2. and at the same time the cash ledger is debited by the amount utilized for payment of taxes. All four things happen simultaneously when he says submit. In addition to this, which is 10th, 15th, 20th, there are four special returns. One is composition suppliers. They have a simpler return because they have no input tax rate that they avail. So there is no business of GSTR 1, 2, 3 for them. They just file on 18th a simplified return where they give their aggregate value of outward supplies, tax rate, outward and exempt supplies separately, and they pay a composition amount on the total turnover. Their inward supplies are nonetheless auto-populated because their invoices also have been uploaded. So they just give the total sales turnover that they have made. Their due date is 18th of the month after end of every quarter. It is a quarterly payment of tax, mainly to ensure that there is the traffic is well distributed. Non-resident taxpayers are those people who only take credit of IGST on imports. That is their special feature. They don't get any other input tax credit. So they have themselves imported goods. Say for example, I am equipment manufacturer, medical equipments I manufacture. I bring some medical equipment, X-ray machines and all, scanning machines. I bring it in India in an exhibition and sell it. So on that import, I have paid IGST on that import, and I now can sell and pass on that credit. So they have a simplified return, it's just a page return. Similarly, ISDs just receive credit and distribute credit. This also must have been discussed by now. So they have a simplified return because they don't pay tax. They don't have any net liability of payment of tax. So they will be just saying that this much credit I have received and this much credit I have distributed, and this is the balance which is still to be distributed. That's all they give. So they have a very simple return. Similarly, TDS deductors, they are deducting tax on somebody else's behalf. So I am a purchaser, say for example a government department, executive engineer PWD, I am handling some 10 contractors. These 10 contractors I am making payment in a particular month. When I make the payment, an invoice is issued to me. On that invoice I make the payment. While making payment I deduct some tax. So I give this detail in my return. For this invoice, so much payment was made and so much tax was deducted.
Sir, can you kindly go back to that
ISD, yeah.
Sir, ISD might receive say particular invoice for a particular say service or whatever, and we might distribute it to 10 persons.
Yeah.
So for each of this, we have to separately give an invoice for the distribution and connect it to the original invoices. Is that the case? Like
he has to, yeah. No, linking also is there, yes. Yes.
Because he might get several invoices.
Yes.
He will not go to everyone.
No.
So individual invoice again has to be issued.
Issued. Yes. Individual invoices have to be issued because otherwise matching is not possible. So I have to give GST to say that to allow that person to avail credit. That also has to be matched. Otherwise, he hasn't distributed and somebody can receive ISD credit. I can claim ISD credit if multiple documents are not issued. Because the GSTNs of the recipients is different. They are in different states or something like that. They are different business verticals or something like that. So you have to, the instrument has to be separate anyway. So that is end of session 1. Don't challenge people saying that there is no scope for evasion.
No, person issuing an invoice. You should not issue an invoice.
I can undervalue, I can misclassify.
So in Kerala, you know that along with the return,
Yeah. Yes.
I can remember I don't get from Gujarati. In 2003, we did Karnataka also. That doctor, Mr. Madhu was there as a commissioner. He was criticizing this system. Now it has happened in
Yes. Many people who criticized these kind of systems.
Now they are adopting it.
Yes, correct.
That is
We adopted, before this came, we adopted the system. Kerala was the first state to start invoice level uploading from the taxpayers, and it was followed by Gujarat, and then many states did it.
But it was critically criticized by so many states that this will create a lot of problems.
I mean, at that time, I don't know, even in Karnataka, we have that format in our return, but we never took it.
But your format is only single
No, no, no. That is also 4-5 page. Or maybe at that point of time, Mr. Madhu's time, it may have been there. But now it is not. And see, in a particular, if the tax is only limited to a state, you can say, okay, I can take risk and give credit, what is there. Okay. But in GST kind of environment, it is not possible, and we'll see why it is not possible. Yeah.
The same thing, the written answer auto-populated.
Beg pardon?
The written answer will be auto-populated.
Yeah.
So there is no possibility to default in return filing.
No, I may not pay. Because see, return happens with payment. So while the return information will be available, but the tax has not come to you. Who wants returns? See, if he was paying tax without return also, we were very happy. But if payment, suppose a whole lot of returns come, but no tax payment, do you want that? See,
Recipient is not done anything.
no, recipient is, see, recipient is also a supplier. Every recipient is a supplier also, no? Why is he receiving? He is receiving things to supply. Either he is a manufacturer, or he is a service provider, or he is a dealer, wholesaler. So, see, let me tell you, if I intend not to file GSTR 3, practically speaking, I will not file GSTR 1, I will not file GSTR 2. See, if I am intending not to pay tax, so who is a defaulter? The defaulter is a person, not that he wants to pay tax. He is not filing return because he doesn't want to pay tax. So if I don't want to pay tax, I will never upload GSTR 1. Because by uploading GSTR 1, I am telling my liability to you. Why will I upload GSTR 1? So a fellow who doesn't intend to file GSTR 3 will neither file GSTR 1, will nor file GSTR 2. His both GSTR 1 and 2 will be nil at any given point of time. Ineligible, it is not there right now. But see, on a post facto basis, you can analyze. You see, because see, 2-digit SSN code and 4-digit SSN code is being taken. So on a post facto basis, you can always analyze that on this 2-digit SSN code, if the credit is not available and some people have taken, you can select those cases in scrutiny and do adjudication. Yeah. But that will be done only through the process of issuance of notice and demand. Even now we do it like that only.
But even if a person has not filed a GSTR 1, sir, he will automatically have a GSTR 2 if he has purchased some.
Yeah.
To that extent, even if he doesn't want to file a return, there is some data that is bound for the return available with the system.
Yes.
You will know who is not doing.
Yes. So you can always project his GSTR 1 out of his GSTR 2. System will not do it, but you will have to do it through the process of non-filer assessment. That, yeah, he can digitally sign, or it is also being tried that he can do Aadhaar-based authentication, or he can do that eKYC, net banking-based authentication also. That is also being tried. But digital signature can't be made compulsory. Huh? Yeah. Say what income tax is doing right now. They are trying that. Huh? That will come. Revision, there is a separate slide. See, invoice he may not issue. Some document issued by him can be deemed to be an invoice. Okay, that exception is there in section 23. That document covering those details which, see, we are not giving the format for invoice. We are only saying invoice should contain these details. So any document issued by the supplier to the recipient containing at least those details can be treated as an invoice. Okay, you can declare them as an invoice. So you can say invoice cum ticket, invoice cum challan, something like that. Okay, but see, the point is, unless those details are there and they are uploaded, how does the credit get passed on? So the bank can say, okay, please exempt me, but then the recipient has to get credit of that. So that is why, like airline industry requested that you treat our ticket as invoice, because we only issue ticket. So we said that if you write the GST of the recipient on the ticket, we have no problem with it. Because taxable value, tax amount, service code, photo, everything is written there. The only thing which is not written is the GST of the recipient. And the recipient may not be the flyer, because the GST may be, the recipient may be the company of the flyer or something like that. Okay. So if you write, so we have to tell them that if you write the GST of the recipient, the ticket, I mean, it can be treated as the invoice also. But see, suppose I, as an airline industry, I have given, if I have an arrangement with a company, say Infosys, say Indigo has an arrangement with Infosys, they need not issue as many invoices as many tickets sold. They can issue one invoice per month kind of a thing also. So, I mean, that is, but the point is that these details have to be there, otherwise credit doesn't get passed on to Infosys. Yes. See, now there is no difference between even E2 sale now. When place of supply will be covered, they will show you how it has been covered under section 4 of IGST Act as to how even E2 sale will be different sales. Where credit, see, GST Act, what it says is that when an even and E2 sale is made, then even sale is exempt. No, E2 sale is exempt. But now nothing will be exempt. See, CST is a tax which cascades, and that is why you have to exempt subsequent transactions. That was the sales tax concept. So now it is not there. So what you say, if you have sold in transit, it will be treated as two sales, and you will get credit and you pass on the credit. That's it. Nothing is exempt then.
So all these invoices?
Yeah, all this. So he will. So if I sell it to you and you sell to him, I issue an invoice to you. Although you have not received the goods, you are eligible to issue an invoice to him, and the goods actually go directly from me to him.
That is also the case of sale to an export.
Even there, sale in the course of import and export also will be handled the same way. Only that much. Yes. Even in the under the SSN code. Under the SSN code, how much is the value? Yes, yes. If you want the total invoice value, then for the same, because invoice number and date is there, for that invoice number you total the total value, but it is of no consequence for us. Yeah. For that SSN, for a particular invoice, for that date, in under a particular SSN, what is the value? So thrice it has to come. So if invoice contains 2-3 SSN codes, then 2-3 times I have to repeat it for every HSN, the same invoice. Huh? Yes, yes, they will be different, because so for each one HSN code, how much is the value, and for the second, how much is the value, taxable value. No, it will. Why will invoice mismatch be there? No, why mismatch is there? Because that guy also has to give the same value. Yeah, yeah.
Timber, normally timber is supposed to be a evasion prone commodity, perhaps. In that case, a dealer purchasing timber from a particular person, unregistered dealer, without invoicing, he may sell that timber to another person. So whether this will appear in the, now also it is not capturing properly. In the GSTN scenario, whether this will be captured or not? No. No.
It
so
will
evasion will continue in this way.
No, see, if the person who is purchasing the timber doesn't intend to take the input tax credit.
Yeah, here now there is a concept called purchase tax, in which he should there is another billing invoice, he should raise it. There is a section called 6.2 is there. Under 6.2, you should raise a bill and you should pay the tax to the government. Now it is not there in the future.
No, it can be there.
Can be there.
It can be there, but it is not envisaged. So see, the legal provision is there. Section 7.3 talks about something called a reverse charge. This is also called a reverse charge. So
Reverse charge is only for services.
No.
No, it's all.
it is for goods and services. So 7.3. So 7.3 says that you can declare reverse charge, but as of now we are not. See where in this case also, if the buyer of that timber does not intend to take input tax credit, this dealer will also not declare whether the purchase or the sale, isn't it?
No, there are systems in which you can have a stock verification. There are so many systems
That you
people
can
are
do
detecting now.
That you can do even now.
But in the GST system, there is no such 6.2 equivalent section.
No, section is there, you can declare. But see the
But
point.
invoice is not there. Proper invoicing.
No, if you declare reverse charge on that, invoice has to be there.
Then where you should populate? In that you can populate that.
Yes.
Okay, that's right.
It is an invoice to himself.
That is invoice to himself.
Yes.
Now invoice to himself, invoice to the person, but tax is paid by him.
But
That is the purchaser is paying the tax.
But in the invoice, he issues the invoice,
Yes, the invoice.
and recipient of the GST recipient is also he only.
Yeah, yes. That will appear here.
Yes.
Okay.
If reverse charge is notified on certain commodities, on certain purchases, it has to come here. TDS. TDS is where I am the recipient, I am the buyer, and you are the supplier, and you you raise an invoice on me, and I have to make you a payment, and I have to pay you the tax also along with that payment. I withhold a part of that tax which is being paid to you and pay it straight to the government. No, it is on with respect to certain buyers for certain commodities. So you are from where? You are from which central excise? That is why you don't know. See, state governments are very much aware of this. So as a buyer, suppose it's like the reverse charge in service tax. So it is like partial reverse charge. So in that but in partial reverse charge there is a liability on the transaction. Here it is not like that. It is just withholding. So tax rate is not my responsibility. Whatever is the amount of the taxable value, a percentage of that, flat percentage of that, I just deduct and pay to the government. And if you are a supplier and I am the recipient, then you get credit of that tax paid in your cash ledger. Because on your behalf, that much amount has already been paid to the, So here what will happen, I will, as a tax deductor, I will say that these all deductions are made on behalf of these people. So those people can go and claim credit. Yeah. Yeah. Even now they file a return also. They may not be doing it in a different matter. You are from central excise. So you are not open to the vagaries of TDS.
No, that is done by the ministerial. When we purchase something, some services, when we make payment, deduction is made towards TDS.
Yeah.
That is done by the accounting staff.
Yeah.
We are not doing it. We are not the accounting.
No. But the people who are from VAT departments, they are handling it. They are collecting the tax from these fellows. So there are people who have deducted the tax, but they don't know what to do with it. So they are just keeping with that money. See, most of the central government, state government departments, what will happen is that when he makes the payment, the TDS amount will remain with the consolidated fund of state itself, because he hasn't even made that payment. No, if you are from Pondicherry, if they are doing in Pondicherry, you are actually very lucky. Because there are, see, for example, panchayats. Panchayats are some people who, there is a lot of confusion about TDS also. No, so it is like that. This is like that only. But in many states you will find that many departments, small departments who make one-off purchases like that, like PWD irrigation, they will normally do. But some department which makes one-off construction or one-off purchases, they don't know, they would have not even taken registration at a given point of time. I made purchase now. Now I've deducted because somebody said you have to deduct also. You deducted, but you didn't file a return. Yeah, yeah. So then.
Interaction is very processing. You will keep on asking questions to repeat and will keep on giving you all the solutions. But I have one small request. If let us break for lunch and come back at 1:45. I am already in fact cut short your lunch period in the university. So quickly, I will be buying and let us come back so that we utilize the time.
I'll just spend some time on why we are doing invoice level uploading and why is it required and why only one. See, as somebody said that look, he cannot evade now that we are taking so much data from him. Then somebody said no, he can evasion in purchase and sales can still happen where dealer isn't registered, buyer isn't registered, seller isn't registered and all. Now actually the purpose of input tax credit matching and auto reversal is not to plug evasion. That is not the purpose of input tax credit matching and reversal. Now I think ITC class has already happened, no? On input tax credit and also on fund transfer therefore. Fund transfer also the class has already taken place. The fund transfer also has been explained, isn't it? Huh? Yes. And there is no doubt on fund transfer, how fund transfer, why fund transfer is required and how fund transfer, where fund transfer will take place, what is the reason for fund transfer and all. There is no doubt on that. Huh? Huh? Okay. So what I will do is that I will just explain to you, because see, we have to really understand, not because you will be handling it, but because this is one question that we have to answer to lakhs of people in this country. So many people are saying, why are we doing this? Even very well-known people, chartered accountants, very well-known economists are making this statement that it is not required and that is not correct. So input tax credit matching and auto reversal, what it says is that you will give input tax credit to a particular person based on an invoice which he has uploaded in GSTR2, and if it is there in somebody's GSTR1 and that fellow has paid tax on it, that means he has filed his return and paid tax along with it, then that credit will be given. If he claims input tax credit in his GSTR2, credit will be given on that day. He can be given, but then it will be seen if GSTR1 somebody has claimed that tax, owned up that tax or not. If he has not owned up, then it will be reversed. One chance will be given to him. 1 month's chance will be given to him to make it match. Talk to his supplier, get it uploaded and get it matched. If it is still does not match, then it will be reversed. And why do we want to do that? Now first of all, we should be sure that we are saying that in the GST that we have today, many people say, why should we have this kind of GST? Why shouldn't we have, the unified GST for the entire country? So let us first realize that we can't have GST without states. It is not possible because goods were originally taxed by states. Production of goods were only taxed by center. To begin with, excise duty was on a very limited commodity. The purpose of excise was very different. The purpose of central excise was like the purpose for state excise. It was on a very limited commodity. Slowly it has, even today, the VAT is a universal tax. Central excise is on set of commodities. There are a lot of commodities out of central excise even today. So on goods and services, if we see the tax basket, around 54% of tax is from state governments and 46% of tax is from the central government as on 2013-14. And therefore, on goods and services, it is important both for central government as well as state governments. Nobody can say that, okay, let us give all GST to state governments. It is not possible. I mean, central government will be really poor by so many lakh crores if it is done. And definitely you can't say that let us take it from the states, because primarily states run on tax on goods and services. So the only way in the current political setting that GST could have been implemented is that of the dual structure. We couldn't have had a GST with a unified structure where this tax could have been levied only by center or only by states. That was not possible at all. So very early, from the beginning itself, in 2009 when the first white paper of Empowered Committee came, or 13th Finance Commission recommended how GST should be implemented, they said that it has to be a dual GST. There can't be a unified GST in India anyway. So if you have one GST, it is dual. If you don't want GST, let it be the way it has to be. So what it only says is, from 2009 itself, it was acknowledged that it has to be dual GST. The only requirement is that there should be seamless availability of credit of tax paid in one state to the tax now to be paid. So if a tax has been paid in one state, in another state, seamless credit should be available without questions being asked, without any problem, that tax credit of that tax should be available. Okay. Now, and so the answer to this question, this requirement, primary requirement, the entire GST is designed around this particular objective. This is the number one objective of goods and service tax which we will be implementing in India. And to meet this objective, the mechanism is the IGST model. Now IGST model will be explained in great detail, but just to give you a small example as to how it works is like this, is that we have, suppose we have state P and Q, okay, and we have the center, and we have a chain where A sells to B, sells to C, sells to D, okay. This is how transaction happens, and this can explain how IGST model works. When A sells to B, we know that CGST and SGST is paid. CGST and SGST is paid by B to A as part of the invoice. When value is paid, goods or services are provided by A to B. Now A pays CGST to center and it pays SGST to the state P. That is how it pays. Now B, it is selling to C, providing goods or services to C, and what it does is that C pays to B the IGST because it is an interstate transaction. This B pays IGST is paid to the center, okay. While paying this IGST, it takes credit of CGST and SGST. This is what ITC class, they must have explained to you how this credit can be taken. And now C sells to D. So C, what it will do is that when it sells, it collects CGST and SGST, D pays to C, C pays SGST to Q, and it pays CGST to the center, okay. And it has paid IGST to B, and therefore it takes credit of that IGST paid to the center now, okay. I mean to the center through B. So B, it has paid IGST to B, for which it takes credit. That is how the tax structure will be. This is how they will be filing their returns, by taking credit like this. Now how IGST model, what it does is that, suppose A to B, when transaction took place, at that point of time, in this, suppose 25 rupees of CGST and 25 rupees of SGST was paid. For an example, let us take it that way. Yeah. Now, so what happens is that, let us, how do we do? P, Q and central government. These people are there, and what happens is that here in this transaction, B has paid 25 rupees each, and 25 rupees goes to state P as CGST, and 25 rupees goes to C as IGST. This is how it goes. CGST. This is what is paid, okay. Now what B does is that, now suppose 50 rupees is there. So let me take 75 rupees of IGST. Suppose his liability is 75 rupees. 75 rupees is his liability when he sells to C. So IGST collected is 75 rupees, okay. So what it does is that it has an input tax credit of 25 CGST and 25 SGST, and it has 75 rupees of output liability of IGST. Okay. So what it does is that it first takes credit of this 25. Okay. So it doesn't pay. So what it will pay is that it will not pay any CGST. No CGST will be paid, and so he has taken credit of. So there is no question of paying of CGST because he has IGST credit. So what happens is that he has taken credit of 25 rupees of CGST, and he will take 25 rupees credit of SGST. Okay, and he will pay 25 rupees of IGST. He will therefore be paying. So he will say minus 25 and minus 25, and 25 rupees is what IGST is, net liability is there, which he will be paying in cash. So this is SGST, this is CGST, and then central government gets 25 rupees it gets. Okay, this is IGST getting. Okay. Now what happens is central government's 25 rupee credit of SGST was taken, which state government has. This money is lying with the state government. It got it here, for which credit was taken for paying a central tax. So money available with state government was utilized for payment of a tax which belongs to the central government. So central government is poorer by 25 rupees and state government is richer by 25 rupees. So what the IGST model says is this: when credit of local taxes paid in one state available for payment of IGST in other state, state government has to transfer that much funds to central government. That is what the IGST credit people must have told you, whoever took that session. So what happens is that state P gives 25 rupees to center. Okay. That is clear? That is how IGST model works, which is very intuitive, because what we are saying is that whenever credit of tax paid to me only is taken for tax to be paid to me only, no fund transfer is required. So when you gave VAT credit to yourself, that tax remained with you actually. So therefore it was okay. But this is a case where tax already, credit of a tax paid to one government is being given by another government. So central government is saying, although 75 rupees was payable to me, but because you paid 25 rupees to somebody else, I will give you the credit of that much amount. So you pay me 25 rupees less, no problem. But then I will take this 25 rupees straight away from state only. That is how it works. That is what sir was asking, that this fund transfer will happen at the month end. So this fund transfer happens like this. Now what happens is, it goes to C. Now C has input tax credit of 75 of IGST, and it has an output liability of say 50, 100, yeah, 50, 50. So suppose 50 rupees CGST and 50 rupees SGST they have to pay. So it has an output liability of 50 rupees of CGST and 50 rupees of SGST. Okay. So what it will do is that, as must have been explained to you yesterday, they will first take IGST credit against CGST payable. So what it will do is that out of CGST 50 rupees, it will take credit of minus 50. It will pay CGST of 0. And for SGST, it will take remaining credit is only 25 left. So it will take a credit of 25. So this is the IGST credit. This is the CGST and SGST payable. And therefore it will pay 25 rupees SGST. Is that correct? So what it will do is that it will pay 25 rupees of, this is fund transfer, this is fund transfer. So it will pay 25 rupees of SGST and only 25 rupees of SGST. That is what all is paid. Is that okay? No doubt till here? Because I had a credit of 75 and my total tax liability was 100. So 25 rupees of SGST is what I pay. Okay? But because for payment of 50 rupees of SGST, I have used 25 rupees of IGST credit. Now IGST was paid to the central government. That money is lying with central government, not with me. And therefore, center should pay this state 25 rupees because this state to its own taxpayer has given credit of tax which is not with them, it is with center. Okay? So what will happen is that center will pay minus 25 rupees of fund transfer to the state Q. Okay? Is that fine? And there ends the matter actually. So what happens is at the end of these all transaction, P has no tax. Q has 50 rupees tax and center has 50 rupees tax. Okay? And that is the destination principle because D, who is the consumer, paid 50 rupees CGST and 50 rupees SGST, which should have gone 50 rupees to Q and 50 rupees to C. And that has happened due to these two fund transfers, P paying to C and C paying to Q. So actually central government works like an exchange in the IGST model to ensure what we are saying at bullet 1, seamless availability of tax paid in one state for payment of tax in another state. So Q, in state Q when C is selling to D, there is no cascading with C. And that is only happening because of the IGST model which requires these two transactions. This is a unique innovation that will be implementing in India. And it will be a miracle if it works the way we are saying. And it will work only if you say that P will give money to C and C will give money to Q. Okay? So what we are saying, IGST model in 2 lines is this. This is the IGST model in 2 plain lines. Okay? And the problem is that suppose that you say, okay, center says that look, give me this 25 rupees now. Give me this 25 rupees. Okay? And the state P finds that B, A, never paid this 25 rupees to me. Suppose after some point of time, state P realizes that A actually didn't pay me 25 rupees, but I had to pay 25 rupees to center. Now repeatedly it is seeing that actually I have to pay to center, but these A kind of fellows, they are not paying their taxes. So at some point of time P will say, I am not going to give any money to center till I verify all my input tax credit. Because I am paying to center, money is never coming to me. Similar thing will happen here. Q will be telling C, give me money because your C, this fellow, is taking credit of some tax paid to you and he is paying me less. So give me that money. But center realizes that B never paid to him. And therefore, center will say, look, I will not give you any fund transfer. If all governments start saying that we will do the fund transfer only when we verify that input tax credit has come, it will be a collapse of IGST model. IGST model will function only if these fund transfers happen seamlessly without any questions asked. And when will it happen? When you ensure that this 25 rupees P will be paying to C, center, and if it doesn't get this 25 rupees from A, from somewhere it will get. So suppose you say that, okay, don't bother, give me this 25 rupees, somehow you will get this 25 rupees. And what this ITC reversal does is that if B has taken this credit of 25 rupees from A and A has not paid this 25 rupees to state P, the ITC reversal mechanism says if he has not paid, you will pay. That is what it says. So thereby ITC reversal, what it does is it tells P, please transfer 25 rupees to C because if A has not paid, B will pay. Which is what says yes, that B has taken credit of 25 rupees and if tax has not been paid by A, then this credit will be reversed. And credit reversal means what? He pays that 25 rupees back to P. So basically by ITC matching and credit reversal, what we do is that we ensure the state governments and central governments and various governments is that they do not stop the IGST model from functioning, and thereby they do not block credit, which is the first objective of GST. So this is the objective, this is the mechanism, this is the problem, the challenge, and ITC matching and auto reversal is the solution for that. And therefore, that is why I say that ITC matching and auto reversal, what has been adopted in the returns mechanism of GST, is not an anti-evasion mechanism. It is the fundamental, the foundation of functioning of GST for the objective that we have chosen. Without this, this would not have happened because of this problem, and because without this, this would not have been, is not possible, and therefore we need not have GST then. If this is not there, then why have GST? So therefore, existence of a functioning, proper functioning of GST completely depends on ITC matching and auto reversal. I hope everybody is convinced, at least sitting here. Is anybody who is not convinced?
Sir, auto reversal is essential for the system, but in the course of auto reversal, what we are doing is we are actually asking you to pay something.
Yes.
Tax.
Yes.
In the general course, what we are handling in the current scenario, if you are asking someone to pay the tax, it's like a demand we are making, and it is instrumentalized to a speaking order.
Yes.
There is a judicial process attached to it. Now we are kind of encapsulating into a system-based reversal.
Correct.
How far legally sound?
No, we have to test it. See, ITC matching and reversal is not new to law. We have been doing it. So in Mahalakshmi Cotton Mills versus State of Maharashtra, High Court of Mumbai High Court said, Division Bench of Mumbai High Court has said that just because you have an invoice is not sufficient for getting input. Input tax credit is not a fundamental right. It is a conditional eligibility. It's a facility given to you. It cannot be taken unconditionally. So government is well within its right to reverse your credit if it finds that A has not paid the tax. That is precisely what they said in that judgment. So therefore, reversal is nothing new. Now how you do is reversal is what we are saying. Now there is no doubt, we won't be under any doubt that this kind of reversal we cannot handle manually. You can't handle manually. So therefore, if we have to have ITC matching and reversal, it has to be auto. And that is why in large part 2 sections have been devoted, very well argued and discussed sections have been put. 6 days it took to discuss those 2 sections in the law, 29 and 29A. Every step of ITC matching and auto reversal has been put in the law. And mind you, the mechanism for this fund transfer is there in the Constitution of India now. So we have gone to that level to put in place this legal structure so that tomorrow because tomorrow if court strikes down this ITC matching and auto reversal, then we have to roll back GST. Because if this goes, this mechanism will never work. And there will be enormous amount of cascading then. Then VAT would have been better. So therefore, and our presumption is that if one state would have done ITC matching and auto reversal, maybe some court would have struck down. But because it is a part of a very big tax reform, it may be very, and that is why it is very specifically every step is mentioned in the law. It was very thoroughly discussed whether we should have such elaborate provisions in the law for ITC matching and auto reversal. And it was decided that for the purpose, because this is such a critical thing for proper operation of GST, every step has been very specifically mentioned as to when it will be reversed and how it will be reversed and whose hands it will be reversed. We will see partial, we will see. How it will happen, I just explained you why is it required. Because a lot of people are saying that, you know, this is not a very fair thing. If A has not paid and B has taken credit, go and recover it from A. You go and recover, you have full power to recover it from A. We are saying we will not recover from A, we will first recover from B only. And you go and recover from A now. You also have full powers to go and recover. But because if we go and recover, then we stop this. And if we stop this, then although there will be only 10% A's who are not paying, the remaining 90% of A's also have problems now, therefore. So why let 10% of A's and B's create problem for some 90% fellows? Let them pay for the problems that they have created and let everybody else get credit. So now how matching takes place, what gets matched? Invoices, debit notes and credit notes are matched. Okay, invoices are given. What is an invoice is explained in section 23. What is a debit note is explained in section 24. So section 24 says debit notes can be issued, credit notes can be issued. The outer window is September of the next year. A very long rope is given till he finalizes his accounts. Till September of next year, credit notes and debit notes can be issued. There are some conditions that it has to be linked to an invoice. For discounts, there are specific conditions under section 15. Within those conditions, any number of debit notes, credit notes can be issued. And these are the two things which are going to be matched. How does it get matched? So all returns which come with a payment of tax are called valid returns, and they will undergo matching. Now how does matching take place? If whatever is in my GSTR2 is my input tax credit and will be given to me provisionally on the date of filing of return. System will not even ask any question. So the fellow gets whatever credit he has sought for, whether somebody has paid tax or not. After payment of tax, after the returns are filed, these will be matched. And first they will be checked for duplication, means in my GSTR2 by mistake if I have uploaded the same invoice twice, thrice, then it will be checked. And then whatever has come out of outer population, somebody's GSTR1 from somebody's GSTR1, whatever came to my GSTR2 is matched. No problem there. If the guy has paid tax, then it is matched. Those invoices which I have uploaded or I have modified will be checked if it forms part of somebody's GSTR1 or not. If it forms part of somebody's GSTR1, then it is also matched. If it is not matched, so now we have duplicate claims and we have unmatched invoices. So duplicate claims will be only told to the recipient because there is no supplier. Supplier has only uploaded it once, and the fellow who has claimed it twice, he will be told that by mistake you have appeared to have claimed it twice. It will be added to your tax liability in the next month automatically. No chance given to him because it is anyway duplicate. Whatever is unmatched will be communicated to both supplier and the recipient. Recipient telling that you have claimed this input tax credit but nobody has owned up this supply. To the supplier saying that somebody has taken input tax credit in your name but you have not owned up. So both get a chance. Now either the supplier adds it to his GSTR1 in the next month and therefore pays tax in that return. If that happens, then it will be treated as a match. Or I delete in my GSTR2 in this month, saying that by mistake I claimed credit, actually it was not there. And then also it is a match. But if I don't do either of the two things don't happen, means it was there in my GSTR1 of the previous month. In the next month, it is neither in the supplier's GSTR1 nor it has been deleted in my GSTR2. Then in the next month, it will be added to my tax liability. So it gets added in the next return. That's it. It will come standing in the return saying that this is your ITC reversal liability that you have to pay, CGST, SGST, IGST.
Sir, this is only for interest income.
Everything.
Sir, say if I claim credit, the invoice I mentioned that this is from the supplier. That gets auto-populated to this return.
No. He has to accept it. Accept, because see, it may not be his return, it may not be in his invoice at all. He has to accept it.
How do I delete, say if I claimed wrongly for a return, how do I delete it? Deletion entry, how
You can delete also. You can say this is the invoice that I had uploaded, the new value is 0000. Next return. In 0. Then suppose reversal has taken place now. As it is very evident, in 2 months After 2 months, reversal will happen. Where matching does not happen, then suppose it was unfair. Suppose B says, no, no, I have actually purchased, this fellow A is not uploading it. So it now says, anyway 2 months time was given, within 2 months time A did not respond, and therefore it got reversed in my hands. I have paid that money, but it was my right to get this credit. Let me go behind A. What system allows is something called a reclaim of reversal, where it says in any month till September of the next year, if A at any point of time uploads that particular invoice in his GSTR1, automatically B will get credit. Because B has already uploaded it. We know which are the invoices of B which have undergone auto reversal. So if A uploads it in any of his GSTR1 till next September, then B gets the credit automatically of that particular invoice. So what we have ensured is that, one, we give B his right to input tax credit on the day he wants to claim it, with a rider that if your fellow has not paid it, you claim it today, I'll give it to you. But mind you that if he does not pay, it may get auto reversed. If still he does not upload it up A, we still give him an opportunity to go and upload it, we don't reverse it. But suppose still if A does not upload, we inform both of them saying that look, this is liable to be auto reversed. Even if then both of them don't wake up and it is not corrected, it is auto reversed. Even if it is auto reversed, even then you give him an opportunity till next September, that if he owns up at any given point of time, then B gets his credit. And when A uploads, and because auto reversal, there is an interest recovery of 2 months, it will be refunded, the credit will be given to B, and interest paid by him also will be refunded to B. Nobody suffers. A pays tax with interest for the time being. For the time being, B has suffered. A suffers eventually because A pays tax now with interest, full interest. And B gets his credit also, and the interest that he has paid, that also he gets back.
One kind of self-policy.
So B will start purchasing from an honest.
Yes, yes.
That is eventually should happen. If B's experience always that A is not uploading.
He will not buy from A.
Then he will tell A to uncertain terms that boss, next time onwards I am not going to give you order. I will buy from somebody else.
Yes, yes.
That is what the trade will.
So what was the time limit of 1 year
What 1 year?
for survey of credit?
No, it is till September. Now it is till September. The law says that till September do everything that you want to do. Because see, after September you finalize your annual return.
What is the time limit for awaiting credit on invoice? 1 year.
Now it is till September. Section 16(5) says till September you can, on whichever date an invoice is issued, September after the financial year of that year in which, if you see 16(5), no sorry 16(15), a taxable person shall not be entitled to take input tax credit in respect of any invoice for supply of goods and services after filing of the return under section 27 for the month of September following the end of the financial year to which such invoice pertains, or filing of the relevant annual return, whichever is earlier. So till September I can go ahead and keep claiming credit. So that is the system of ITC matching, auto reversal and reclaim of reversal. This is a procedure for invoices and debit notes. For credit notes it is almost the same, but the liability is opposite, because credit note is a reduction in tax liability and a reduction of input tax credit. So while invoices and debit notes, the beneficiary is the recipient, the beneficiary of a credit note is a supplier. So here the reverse will happen. So if I am a supplier, I upload one credit note which the recipient does not accept, then I will be notified, everybody will be notified, and if it does not match, then auto reversal happens in the hands of the supplier. Supplier will have to pay the liability which it has reduced back to the government. That is the only difference. Otherwise, Here also after 1 month it is communicated after a mismatch, 1 month time is given, even after 1 month time it is not, then next month in the return it will be reversed. And then there also it can be reclaimed like debit notes and invoices, including interest.
Can we amend the details? Say once I upload a debit note or credit note detail,
Yeah.
it's basically to amend details in an invoice.
Yeah.
Say I have issued a debit note or credit note by mistake.
Yeah.
Can that itself be amended by
Yes, another credit note. 100 times you can issue till September.
In that case, the reference should be to the specific credit note number as a document.
No, again in the invoice only.
It is always linked to the express.
Yeah. So that is the mechanism. This concept of valid return is there because it is valid return means a return which has come with payment. Now, we all don't recognize any invalid return. We never recognize that a return has come without payment. So a return, as we had discussed, that a return which has not come with payment is only actually information for us. It has no value. It is not part of the entire matching exercise. The fellow remains to be a defaulter if he has not paid his taxes. Now, what valid return does is that basically what it does is that because there is a leeway of 2 months, if you take all returns for matching, whether he has paid the money or not, then I can actually keep misusing this mechanism of this 2 month window. I can keep passing on credit without paying taxes. So what the law says that if you have not filed a valid return of last month, you cannot file return for the next month. You cannot actually go ahead at all. So the moment you default in a particular month, from next month onward, you cannot pass on credit. That is what it basically says. That is how it blocks credit transfer the moment A defaults for a month.
I cannot upload GST amount legally.
No. Yes. So no auto population will take place. Any question till here? Most of the part of the presentation is actually over. Now only some subsidiary things are there.
So the ITC can be availed before 30th September.
Yeah.
The same way the annual credit is filed on or before 31st December.
Yeah.
When will the 31st December will become relevant? On or before, whichever is earlier.
No. See what happens. I can file my annual return in May itself. Suppose I file my annual return in May itself, then I cannot claim credit after May then, because annual return has been filed now. So if it is filed after 30th September, it is okay. But somebody can file before 30th September also, no? That is why it has been put, whichever is earlier. Huh? After that he can't, nobody can do, because now he has filed his annual return. See, after annual return is filed, actually annual accounts are closed. So not much can be done now. No, most of the trade files is our annual return in under our act by December, 31st December. So under income tax they will be filing by 30th of September, and by our return they file by 30th of December. Huh? Yeah, most of, we'll come to that. Annual return is a part of presentation. Most of it is auto generated, but there are certain transactions, reconciliation and all which will not be there. Non-GST kind of things. Okay. So we will come to the correction of returns, which we have already discussed most of it, where invoice, if it is uploaded wrongly, I can correct it, or any other detail, as I said, credit note, debit note also corrected wrongly, I can correct it by giving a reference to the original entry. I can say this was what was entered and this is what the new entry is, and to that extent the correction is done in that return for those transactions on payment of interest and all if applicable, which is now by now most evident to you. I mean, by this point actually I don't even need to explain this to you. Every details, even like B2C and everything, it can be done. And the curtain for every change is September. so that everything is done by the time annual return is filed. See, whatever you upload even in September, say for example, suppose you missed an invoice and now you upload it, and suppose it has to be auto reversed, then it can happen till November. So that November return, when you file in on 20th of December, by that time everything has been settled. That is how September has been chosen. And by 31st December, when you file your annual return, all auto reversal, everything has been settled by that time. Because in October anyway you cannot upload any invoice. Then we only have annual return, which is very similar to annual returns of various tax which we have today. As we have been discussing, most of it will be auto-populated, but there will be still some reconciliation problem. We have not worked out whether 100% auto-population is possible here. It will auto-populate, but it will allow the taxpayer to correct it if they want to correct it. So most of these details of the details of expenditure, that is all purchases, details of income, that is all supplies, then accounts of taxes paid, not paid, arrears and everything, refunds, profit loss, and a reconciliation statement will be there. It is not to be filed by ISDs, TDS deductors, casual taxpayers, non-resident taxpayers, because they don't have any separate balance sheet that way, because they are all, deductors are not taxpayers in their own right. ISDs are nil taxpayers. Casual and non-resident won't be there for the whole year anyway.
What is the reconciliation statement?
Reconciliations, even today you will be having reconciliation statement. In the annual return, if there is a discrepancy between annual return and profit and loss, you explain, because it may relate to a different tax period, it may different to a different year. So there is a correction in this account for the previous account. These kind of entries are there in accounts which have no tax implication, but it will, so there will be difference between total turnover and details of expenditure. So total sales which you have shown and the total revenue that he is showing may be a difference. So he will explain that difference in the reconciliation statement. No, not for everybody. It must be for only for 44 AB company, that is 1 crore and above. Even now this law also it is the same. The annual account, annual return and reconciliation statement has to be filed by everybody. But for the remaining fellows, for the lower fellows, you don't need to be certified by chart accountant or cost accountant or company secretary or whatever. We have first return and final return. Final return is very simple. It is on closure of business. It is only for reversal of certain input tax credit which has already been taken. So suppose I have bought a capital good and I have got some credit and I also utilize that credit. But now I am selling. Before the shelf life of that capital good is over, depreciated, there is a still residual value. So those kind of things have to be reversed. Similarly, I have goods in stock, raw materials, finished goods. So raw materials I have taken credit, but I have not used them for production. It is still there in stock. So the day I close the business, I have to reverse these kind of credits. For that, final return is there. Even today, most of us, I think excise also has it, VAT also has it. People don't file it, it is a different issue, but it is there. First return is a very, it's a very kind of a legal thing which has come in, because we are allowing this law 30 days window from the date of liability to the date of registration. So if liability arises today, I can take registration after 30 days also. Within that 30 days, this fellow will not even have a GST. But he can make taxable supplies and he can purchase goods and services for which he is eligible for input tax credit, because you have given legally in that window. But he doesn't even have a GST. So, he'll have to, he can't log in onto the system and file a return. So after he gets his GST, he'll have to file a first return, saying that, these are the, and we have not worked out the modalities, but this may become a manual process completely, because even the supplier who has supplied these goods, when he filed his GSTR1, the GST was not there. So this must have come as a B2C supply somewhere. So it is complicated. So maybe it may become a completely manual process, but because you have given 30 days time, you have to provide this kind of a mechanism for him to claim that credit. After the return is filed, there are various things like you have system-based notices. Whoever doesn't file the return, system will give him a notice. There is a late fee of ₹100 per day, subject to a maximum of 5,000 rupees. Then this will be taken by Mr. Mishra. There is, if he doesn't file a return, you can do a non-filer assessment. Then there'll be because we have lot of data, we'll have lot of data in this return. So a lot of analysis can be done, and there is a section for scrutiny of returns. So it will be scrutinized. Then officers you will be issuing notices. There will be scrutiny assessment, and there will be detailed assessment of returns filed.
Non-filing of the annual return, would it kind of anyway disable from filing monthly return?
No. Yeah. You can't do that. You can run behind him, but not that. There is some fine, I think. Somebody said that, look, let us not have 50. I think it is some more amount of fine is there. I don't recall, but it was discussed that if you put 5,000 rupees file for annual return, then nobody will do it because the fees of chartered accountant for certifying will be more than 5,000 rupees. So nobody will file. And they will say, okay, I'll file, I will pay 5,000 return, 5,000 fine only. But I don't think that change has come. But somebody was saying that you make it 25,000. So maybe that will make him file the annual return certified by chartered accountant. Now, we have discussed a lot of technicalities, and we like this kind of detailed information which is there with us, and all these processes, GSTR 1, 2, 3. Now, these actually put a lot of responsibility on us, and it is our job to understand why they are so important and to communicate to as many people as possible as to why they are important and why it is important to have GSTR 1, 2, 3 separately like that, why it is required to have ITC matching and reversal. See, it is not, no taxpayer would like to have such a system. But why is it so important to have it so that system keeps on going and all? It is our job to kind of communicate and disseminate this information to as many, not only our own department as master trainers, as trainers, it is not only your job to train your own officers, but also lot of outreach to professionals in the market, to the trade and industry. That look, it may look slightly counterintuitive that we will reverse, match, and everything, computer. But the point is that look, it's a package deal. If you want GST, it comes with these kind of complexities. Otherwise, it is not possible to have a pan-India system where somebody is paying tax somewhere and that credit has to be given somewhere else. It is not possible. We are not used to that kind of systems. And to explain that, look, see, many of our states, we are doing invoice level uploading. As you said, we have been doing it for Kerala has been doing from God knows how many years. It is not a very difficult thing. The analysis of the states, which 12 states are doing invoice level uploading in the country today, large states, Maharashtra, Karnataka, Tamil Nadu, so large states, Delhi, large states are doing invoice level uploading today, and average invoice per person, per taxable person is 200 per month. So 200 is not, 200 means what? In Karnataka we have 137 is our average. So in 30 days, if 200 invoices are issued, that is like 6, 7 invoices per day is what we are talking about. So if suppose weekly if weekly I upload my invoices, I am actually uploading some 14, 15 invoices per week I have to upload. It's not a very big deal that we are talking about. Somebody may say, I issue thousands of invoices. If somebody is issuing thousands of invoices, he must be a big guy. So therefore, he should be okay. He shouldn't be very bothered about uploading 1,000 invoices. There are. So, for example, Honda Motors, their purchase invoices run to some 300, 400 per week, because they purchase like that. They purchase small things. There are people who are purchasing only, some guy makes 2-inch spring for Honda Motors, for the shock absorbers, and he only manufactures that and supplies to Honda Motor. So these what they call OEM manufacturers. So these are the people. So, but Honda can manage. If you see, when I say 137 is the average, on one end is also Honda. So a small taxpayer, a mid-range taxpayer will be having around 100 invoices to upload. It is not a very big deal, and by doing this, we are able to provide a very immaculately designed system which will deliver a fairly robust thing. Today, how do we handle input tax credit? Input tax credit he is availing, At some point of time, our officer goes and he denies some input tax credit, lock, stock, barrel after 3-4 years, saying that this invoice is fake, this invoice is fake, this invoice is not there, this invoice is illegible. Now, it is a cost for him. So, in a way, now after invoice ITC matching, there will be no ITC denial in future. In your assessments and all, won't be ITC denial because everything is now matched. We will be doing something else now. Maybe we will be doing valuation, we will be doing classification kind of audit, but not ITC based. No, nothing will be there. If today, if you see your assessments, a large part of it is ITC based, where we are denying ITC to people. So there he gets to know in a month's time. In fact, the GST system also promises in the law something called a GST rating, where the GST system itself will tell that, look, this fellow in last 1 year has uploaded, people have claimed some 3,000 invoices in his name, out of which 2,500 got reversed. So people, before buying, I have that information from the GST portal. It is an official information. So people will not like to buy, as sir said, I will only like to buy from that fellow who is an honest uploader. So it has its value in the system, and of course it has its risks also. But the point is that we have to kind of propagate as much as we have to explain to people that this is a system which is pro honest taxpayers and go against dishonest taxpayers. So if you are an honest taxpayer, don't say that this is bad, because it is in your favor that it works. Because it is your invoices. People will purchase more from you if you are an honest taxpayer. Because you are the one who are issuing invoices, you are the one who are uploading invoices. So if I want input tax credit, I will go and purchase from you. And system is trying to make it as easy as possible. GSTN has the software that the way they are making, they are trying to make it as easy as possible. They have said that on a regular basis, any point of time, online, if you want to upload your invoices, as and when you issue, it is possible. They have a system called GST Suvidha providers. So a particular company or a service provider can register with GSTN. They can have their own software in which they can give you all kinds of facilities depending on your sector, depending on your size. So if you are a very small taxpayer, you can use an Android, iPhone kind of an app where you can keep uploading, entering your invoice, and at the end of the day, at the end of the month, at the end of the week, or every 3 days once, you just upload it on GSTN. I was told that many auto companies have come forward for having a software for their sellers. Like I said, for Honda, if those people don't upload, then Honda's credit gets reversed. So it is in interest of Honda to see to it that their suppliers upload it regularly. Now they have their own software. Bosch has its own software for supply of OEM, because for their accounting it is easy, for their inventory management. So whatever is supplied to, whenever some goods are dispatched to Bosch, they use Bosch's software to upload saying that we have dispatched these goods to you. For their own inventory management, they say they are doing it. So they are very ready to say that that invoice detail also, all the GST are one of our sellers, we will upload. Because anyway, that guy cannot sell to anybody else. That spring can only go into Honda motorcycle anyway. So he says, okay, I will upload all GSTR ones of all my sellers. Then there are risky people. For example, IOC in our state sells furnace oil to 17,000 people. So suppose IOC does not upload one month. It does not upload the details of furnace oil sold on GSTN. Then it has spoiled the prospects of 17,000 taxpayers in one go. Suppose one employee says for 5 days leave, he goes. From 5th to 10th of the month, he goes on leave and does not file GSTR1. In that month, he will reverse the credit of some 17,000 taxpayers. So we are identifying such fellows who are risky from the perspective of reversing somebody else's credit, who are big suppliers to big number of people and dispassionate. See, either I buy furnace oil from IOC or I don't get furnace oil, because in this country there are only 3 refineries. It is a fairly monopolistic market. So I can't tell IOC, you are not uploading and therefore I will not purchase furnace oil from you. IOC will say, okay, go, furnace from anywhere else. So we have to preach in between. We have to ensure that IOC does it. If IOC does not upload its GSTR1, maybe we should prosecute their officers next day itself, because you are creating problem for the system. Similarly, there are opposite fellows like Metro Cash and Carry. They are vulnerable from the point of GST auto reversal, because they are big buyers from hundreds of fellows. All kinds of people are selling to Metro Cash and Carry, and they are all B2B. So these are the people who require some hand holding, they have to require some monitoring, and it is our job to see that this whole thing of filing GSTR1 by due date is taken care of. There is a provision for tax return preparers. 34 talks about tax return preparers, which will go very handy. Many of our states have these small time professionals who have purchased one computer. They are slightly aware as to how tax return has to be filed. They have everybody, all of them have some 15, 20 customers. They will file this GSTR1. And sir also was saying that we should go ahead, and in Kerala you have these kiosks. What are they called, sir? So these are people who are very potential. If you train one such fellow, he will be servicing some 20 such fellows. See, it is not possible for us to go and train every dealer. But suppose you train them, or those which are very active, they can be a very big value for us. Chartered accountants, cost accountants, we have to communicate to them, we have to explain them these things, that look, this is how system will work. If you make it work, it will work well. If you don't make it work, then it's a package deal then. So basically, in first few years, we will be really doing a follow-up on invoice level uploading. Many of your, we will be having some review formats where we will say how many people's credit got reversed, how many, because see, if some people's credit get reversed, system will not be taken for a ransom. So I always say that if 80% people have 80% of their invoices go through, then system will run smoothly. If it is the reverse, if 20% of people get 20% of their invoices go through, and 80% of people have 80% of the invoices reversing, then we are talking about a big time chaos. In front of our offices, there will be people sitting on dharna and all, and they will be shouting slogans against us. So it is basically, it is in our ambit to kind of minimize the risk of auto reversal. And if we are able to do it, if we are able to, it's not a very difficult thing to do it. And if we are able to do it, if we are able to make people upload on time to ensure that auto reversals don't take place, we are on the, we will be making this very big reform a success. So thank you very much. If you have any question, please feel free. Closing stock inventory in your return. Annual return, it is there. Even now I think it is there. In the format it is there. Something is there. It is a problem because input service distributors, because they cannot file before 10th. Because they are passing on somebody's credit who has uploaded it only on 10th. No, there is no problem of CGST, IGST. Why did you ask that?
They are distributing it.
They are?
Distributing credit.
Yeah. So I can be distributing any credit. Yeah. They will not, see, the point is, if when an ISD invoice is issued, suppose it is auto-populated, then it is very well and good. Then it is part of my GSTR2 anyway. That date is different because ISD receives credit on 10th and has to transfer credit before 15th. So if I file the ISD return on 13th, that mechanism has still not been worked out. But even if suppose it is not auto-populated, that fellow can upload it in his GSTR2 independently also. He can upload it, he can claim it as a non-auto-populated invoice. it will be matched at some point of time.
Sir, GSTR2, there is any capital goods uploading GSTR2?
No. Capital goods, it will come, no, as part of your GSTR2. It
will not reflect in GSTR1, so that there is no sale on that particular thing. Whether it is a separate sheet or something?
No, no, not required.
So, not required. Perhaps I may be purchasing a machinery.
Yes, yes.
That I am not even. Whether that input credit will be given in that month itself?
In that month itself.
Here it is how many months?
No, in Kerala also it is same month.
No, installment is here. Sorry, no, that money is going out.
ITC on capital goods can be availed in 36 weeks.
If it is about 2 lakhs, it is about 2 lakhs. 5 lakhs. 5 lakhs.
In GST, it is in one go.
So, you will be having, for example, a person having a high capital goods means a negative input tax.
Yes, yes. So what will happen is that he will have the credit in one go and he will utilize it over a period of time. He will use it for payment of duty over a period of time, but the credit will be given in one go. Yeah. No, earlier we had some 5 years, 2 years, but it is unadministrable. It is very difficult to say whether he took it like that or not.
Now?
So we changed it. We said one go.
So that month itself?
Yeah. In many states actually they undid it.
So what would be the cost if you take it in the same month?
Same month.
Here also in GST.
Yeah. Earlier in this we had 2 years. But then GSTN suggested don't have it. It is creating a lot of problems. Because there will be always...
Installments will not...
Yeah, because there has to be a separate ledger for that then. It was there earlier. In the earlier, even if you... Today I think if you say the return report, it was in 2 years, in 2 installments. First year first and then second year again. So it is effectively in 24 installment it became. But then it was decided that it is causing too much of problem and therefore we should reverse to in one go. So now the law says it is in one go.
So there is a chance of maybe selling that capital goods also, which will not reflect in GSTR 1?
No, he is selling second hand.
No, he purchases a capital goods and he avail the credit and he may sell it. It will not appear in GSTR 1.
No, who will buy that? Nobody will buy that, no?
No, he can buy without he can sell that. He can sell it without invoice.
No, but somebody who is buying, he would like to take credit. Capital goods are not...
Capital goods, maybe it not by, I think in your GSTR 2, you are not differentiating capital goods from normal sale goods. So, he may sell it without invoice. There are chances.
No, that chance is there for selling without invoice, chance is there for anything. Why only capital goods?
No, it terminates there now. Capital goods he is using. That capital goods means he is using, it terminates there.
See, the law says that if he has purchased capital goods and if he sells it before its residual value is diminished, then he has to reverse credit on it.
The entire credit?
No, there will be a formula.
Formula, yes. Yeah.
But if he sells without invoice, without telling you, then obviously he will not reverse also. You will have to go and catch him.
So that is the case in GST also?
Yeah.
Same.
See, let me tell you, it is not GSTN can give you some utilities, not average utilities to do certain rudimentary things. But one, it should not be the GSTN's work to give a software. See, they are making a fairly big amount of software for administration of GST itself. Okay. Now, if you ask them to do, see, accounting, if I have to use a software, I will use a software which meets my needs, not your needs. And when I use Tally not only for, see, why will I use a software which only caters to GST returns? I have other returns also, income tax return also has to be filed by me. So I would either GSTN provides a software to cater to all returns which a normal businessman will file. Why should GSTN first of all do that? See, then GSTN will have to develop an accounting software itself, because I have to maintain my inventory for my own business purposes. I have to maintain my balance sheet, my P&L accounts, my cash flow statement for my own purposes also. But why will I use a software which only prepares the GST returns? Nobody will do it. So what it can do is that, one way is that you go and data enter on the website, but that may be tedious. So I can give you a utility where from your accounting software, maybe you can transfer the data to that utility and then upload. Or I can allow you directly uploading from your accounting software also. That is also possible, which they are doing right now. From the most of the accounting software, directly uploading is being allowed in this particular system.
So whether GSTN has its own accounting software?
No, it can't, because that is not their job. Otherwise, they will be spending more of their resources on maintaining that accounting software itself. People will be asking, saying that this is useless, this problem is there, that problem is there. See, Tally is in that business. So it is better to say that there are some 5-6 accounting softwares well established, your market is there, people are using your software, you are in their business. I will give you interfaces where you can interface your software with our software. Directly from your software, you upload the information to our software. That is allowed, that they are providing. But GSTN going ahead and providing an accounting software is a fairly big challenge. Otherwise, they will have to develop their own accounting software, they will have to manage that accounting software, they will have to sell that accounting software. So, see, the market is open. People will come with, even people are coming with free apps now, which will file GST return. If you enter the data in this fashion, they will file GST. There is some GSTN CEO was telling, there is some company, there is some software for a clear tax or some fellow. He gives a software for, you can manage your, on his portal, you can manage all various kinds of things. He's completely free, he's completely ad based or something. And even some 25-26% of income tax returns are filed through that portal. So he has come forward that, we will make it for GST also, so that people can use this particular thing to file. So see, that division has to happen. GSTN should not, first of all, cannot, and then it also should not get into the realm of accounting softwares. Because how many needs can you, it is not your job also to enable somebody file income tax return. Every time income tax changes its format, then you have to first go and change for your format. Why should you do that? So you provide your software should be such, modular in such a fashion and open that you can allow people to upload the return data without any interface of exporting, importing or data entering and all. From my accounting software, I will say file this return GSTR1, file GSTR1. From the data, it will file GSTR1.
And not verticals, simply branches?
Branches are not allowed separate returns as of now.
Registration is
Not allowed.
Registration is not allowed.
No.
Suppose, say, last day we were discussing that, say in Kerala, when KSF who is a service provider in Chitti Funds, they may be having hundreds of branches within Kerala. So what about them? Do we say that they should have their centralized accounting?
See, what GST is allowing is that it for the same taxpayer they are allowing multiple user. So if you have 30 branches, 30 people can upload their own invoices from wherever they are, and one fellow centrally can see what is being uploaded. Yeah, so that is also possible. But as of now, registration is one for that guy. We have not, in the law which is there today, as of today, there is no multiple registration for multiple branches, is not there.
Within a state, it will be one registration.
One registration if it is one business.
But they are all acting independent business only. Same business but independently. Independent of each other.
No, the PAN number will be one.
No, see, the balance sheet must be one. No, what do you mean by independent business they are doing? If they are one entity, they must be maintaining one balance sheet, one profit and loss account.
So you are
Unlimited users.
How many users can?
They are providing, they will charge for it. They are saying they'll charge for it. So GST will one user free, and then second user they'll charge for something. That is what they were telling. It's okay. It's a premium service. You are saying that okay, many people can upload the same thing. They'll have to maintain more number of users for one particular, they charge.
Sir, doesn't it mean that the GSTN will be my centralized accounting system?
No, it is not an accounting. Accounting is much more than GST.
Tax accounting?
Only indirect tax accounting.
Yes. Okay. Thank you, sir.
So what happens to the payment like penalties and returns, the monthly returns are provisions to capture those data also? Like demand, interest and...
See, a demand will be generated by your backend system, but the ledger will be there centralized. So what will happen is that your software will have to go and update on their software saying that this demand is generated. So that will be logged into their system. So when the taxpayer goes and pays, he says that this demand has been generated, then he can refer it. So that interface will be there. Which payment? No, payment there is a session, a separate session. No.
Supposing this month return, I had some case previously.
Yeah.
I was issued with the demand. I paid the demand along with penalty.
That payment you have to do separately.
That will not be getting returned.
No. See, because return is a front-end business will be handled by GST, and demands and all will be handled by the respective state softwares. So it will be there in a central fashion. It will be there, but it will not be paid with the return. The payment will not happen with the return.
It's not captured by the return.
No.
But there will be some element of the CGST, SGST, all this thing has to fund transfer has to happen for even for a demand of the normal course of business.
No. See, fund transfer only happens when you take credit.
Like there is a equation which I kind of Tata State to roll out. So to that I need to ask about tax liability which is CGST and SGST. That is based confirmed as a demand. And when that person pays the demand around the payment, there is a CGST portion, SGST portion, or perhaps even a SGST portion. So at least how that be captured, how we pay the fund transfer happens.
No. See, fund transfer does not happen when payment takes place. Fund transfer happens only when you take cross credit. So if you take cross credit for payment of that tax, then fund transfer will take place.
So this additional demand goes some portion of GST. How it will be opposed?
No, see, if it is an SGST demand, SGST is paid. If it is CGST demand, CGST is paid. If it is an IGST demand, IGST is paid. For payment of CGST, you can avail IGST credit, then fund transfer will take place. For payment of IGST, you can pay CGST credit, so then fund transfer will take place. No, it depends on which tax. So SGST.
So there is no sharing for
No. If the penalty is levied on payment of SGST, it will be SGST penalty. If penalty, because the act is different. So when you levy penalty under SGST Act, it is penalty under SGST Act. Which one? Yeah. So all compounding fees, if you collect, then that is there is late fee. Yeah. No, it is 100 rupees. No, why will it be shared? No, it is 5,000 in under every act. See, it is 100 rupees. Yes. It is under 100. It is 100 rupees under CGST Act. It is 100 rupees under SGST Act. See, it is for all practical purposes, there are two different acts. Late fee, yes. Yes. No, IGST there is no provision. So there, because the SGST and CGST acts have the provisions of late fee. So practically it is 200 rupees per day, subject to a maximum of 10,000 rupees. Same thing. Whatever credit you use, that much fund will be transferred. No. There will be a separate form for that. No, it will be mainly through email or on his login on GST, and also it will be available. Yeah, so when he logs in, it will show that there will be a format for that. In the law, in the rules, we will provide for a format. In that format, it will be made available. The language that we will be using in the rules is that it shall be made available to him on the common portal. But it will be also communicated through him to him on email. One SMS also can go saying that so much invoices of yours are getting reversed tomorrow. Be careful. No, the rule will only say shall be made available on common portal. It is his responsibility to go. As an added thing, you are giving him on email, but he can't say that I never got my email. So you can't reverse, because we will tell him that we never told you that we will give you an email. We may be giving you, but whether it was given on the common portal or not, that can be proved in the court of law, because that is on a server. No, he can say, I have never logged on, therefore I have not filed my return. So then law says 100 rupees, reversal, everything. No, it will be made available. See, I cannot make him forcefully see. See, when we serve notice, he can say, I never opened the envelope. You don't read to him, no. You just go delivery. So there also, we say delivered or stuck on his doors. You don't say, so there is a mode for, in the law you have said how notices will be served. So it is deemed to have been served if that process is followed. That is what courts say. He can still say, I never read it, I know. No, we are not envisaging. These kind of notices, see, notice for recovery and all will be there. When for recovery and all, notices will be through hard may be there. But for all these things there can't be, because the numbers are very large here.
What will be the timeline for matching happen and final 20th is the last day? After that, how long does it take?
No, here because matching is decentralized. See, whatever is auto-populated is matched. So there is very little matching will happen. See, what will happen is, whatever has come in GSTR 1, that I will run and take. Whether it is right or wrong, suppose the invoice number is wrong, invoice date is wrong, or something is wrong, I will say, okay, let me not bother about it and first take this credit. So most of the people, what will happen is that they will start taking the GSTR2 auto-populated only. They will not be uploading, because 5 days time is there anyway to upload. Most of the fellows will not even be able to upload their GSTR2, and GSTR3 will come by that time. So we very strategically that 5 days only has been kept for that. No, you didn't listen. When I answered, you didn't listen to that. See, penalty will be imposed under either SGST Act or under CGST Act. Huh? They are two different acts. So if you have imposed the penalty under the amount of penalty imposed under CGST Act will go to central government. The amount of penalty levied under the SGST Act will go to the state government.
So what will be the impact on the other side? See, for example, under section 66, we imposed a penalty, state office.
Yeah.
What will be its impact on CGST?
Nothing.
Nothing.
Nothing. See, as per the law goes, nothing. But mechanisms will be.
State office cannot act upon it.
No, they may. See, what I am saying is they are independent to each other. Mechanisms will be developed. We are developing mechanisms. For example, one of the mechanisms being proposed is cross-empowerment. So whenever you impose penalty under SGST, you also impose penalty under CGST simultaneously. Or when central government officers are imposing penalty under CGST, they simultaneously impose penalty under SGST also. So both demand notices go together.
The tax if any collector along with the penalty will also be this way.
Yes, yes. See, it is for legal purposes, it is two tax. There are two taxes. Rates will be different. So thank you very much. Thank you for being very patient listener.
Like I said, that it is always very engrossing when we hear Ritvik in all the meetings. And here also, while taking the session, in fact, many new things, the more we listen, the more we learn. So as it goes, you know, it holds true for all of us. We should learn to listen and listen to learn. That's the way to take this journey forward. And as we go along, in fact, definitely the first basic fundamental thing, that how the returns are going to work in GST scenario, that orientation was fabulous, Ritvik. On behalf of all the participants and on behalf of, in fact, Commercial Taxes Department and also our colleagues from Government of India and also CAG and Gulati Institute of Finance, that we extend thanks to you. And as a token of our, affection and love, I will request Tyagaraj Babu to hand over this small memento to you. It's indeed a pleasure to have you here.